wants 200, baby.
You ready to get back to the trading action?
You aim, you shoot, and make money. It's going to be a great day. You guys know where you're at.
What's going on, traders? How we doing out there? It's Money Mitch back here in the hot seat. Trade the pool. You guys know where you're at, and it's an exciting week. We got a great week for you guys planned. Of course, it's the biggest earnings week of the Q2, or maybe we can just say the year. We'll see what happens, as of course we get the big tech names this week. We got a lot to talk about on the trading front. You guys see I have what, 4 trades on already as we speak, watching the S&P 500 move back and forth right now. Will we get some pullback in the semiconductor? What happened over the weekend with the war? And where are the trade ideas? If you want to find out, this is the place to be. Stick around right here. Of course, Trade the Pool has you guys covered. We'll get to the playbook action. We'll go to the sunrise report. And then, of course, we'll get to the trading action. We'll have Michael Noss talk about what's going on in the market. Get some conversation in the COT data. And then, of course, we'll have Airplane Jane later joining us, talking about what levels to be watching, what trades she has on the radar. Stick around right here. It's Trade the Pool. Let's get to it with today in the playbook action and see what trades we can come up with. All right, first trade that we're going to look at is a stock that has been absolutely ripping, which is ARM. This has actually been on a close to 40% rally since the area that I was watching. And now this stock continues to rip. It's up there towards 231. I'm looking for pullbacks all the way back towards 200. So today could be 2 ways to play this. For day traders, you could be maybe looking to short this as it's an extended long that's a little bit far from the 9 moving average. Now I'm looking for some pullbacks that come back to 200, and that's where I'd be looking for some dip buys. We'll look to see if we get an undercut under 200. Maybe it happens today. Maybe it happens tomorrow. I'll be looking for this as kind of a swing trade opportunity. But for right now, it could be that day trade to the downside. Right now, already cracking a little bit here. You guys can see the action this morning. We started to crack right around 8 a.m. So you've seen the market also crack there. Will we get some pullback in the semiconductors today? I'm actually going to be watching for that type of action. And it doesn't mean that I, really want to be such like a big bear here. But if I want to get some pullback opportunity, maybe catch the day trade to the short side, then looking for swings on deeper time frame pullbacks. We'll see what happens here. Of course, it's Trade the Pool. Let's get to another trade idea. Let's go to Cleveland Cliff as we take a look into steel. Of course, so you guys see it on the bottom left. I actually have a position on this. Sold already half of the position from 927, right? So 927 this morning and even after hours last night. And this is why you want to be trading with Trade the Pool, guys. Clip it right here. You guys know it. This is all about also 24/5 trading, limited risk. And what was I able to do last night? I was able to cash in on this swing trade, closing some above 1020s into the 1030s. This got as high as almost 11 last night. So looking to see what happens with this, looking to see if we can break the 11 spot here and go higher. Cleveland Cliff, steel names, looking great. A breakdown below 10 tells me I might need to exit for the short term. And then I'll look for deeper time frames back down into the 975s and 950s. But it's been a great move already, over 10% right now. And at the highs there towards 11, we're talking more 20%. And this is in a one-day trade. This is why you're here. It's Trade the Pool. Let's keep it going. Let's go to another trade idea and take a look into the action into TLN. Yeah, let's go to independent power producers and talk about turning on the power here with TLN. Of course, this is the name that kind of goes with AWS, and I've talked about this name for a while now, so I'm sure this is not the first time you hear it right here on Trade the Pool, but this has a really nice setup on the long term. You can see the trend line coming right back into play. You can see where we're heading. We're heading back up here, looking for a break of 380s, especially last week's high. Last week's high got to a 371. So if you take out that 371, you start getting into this box zone. You're going to be looking really good for a break of 400 and then a continuation, maybe potentially 450s coming in soon. What will be the tell sign? I always talk about it. Well, look at the complex, right? And independent power producers. Look at the leaders in this space. You can look at it with, of course, what? GEV. GEV is the clear leader here, has been an absolute monster ride higher with their earnings last week, went higher, and now CEG making the breakout on Friday. So pullbacks on this name could make sense. I talked about this name that it could break 300 last week. Well, it got that and then some. Now back towards 315. Another name that's trying to make a trend line approach. We'll look to see what happens to these names. But independent power producers is, of course, one area that I don't think goes away for this year. And you'll hear more conversations about bring your own power. Of course, guys, smash that like. That's what you guys are here for. Let's keep going. I'll give you guys one short so we don't stay in the long game too much. Let's take a look at a potential short in T-Mobile, TMUS. As we're seeing a downside hit come right back in here. This was kind of one of those dead cat bounces, right? So the stock was already lifting in the prior action, but then it starts to fail. What do you look for? You look for a bounce back at the prior support zone. So this is your support zone. You bounce right into that zone. And what do? You don't keep going. You reject it hard on the downside. Now you're looking to break the support and go further down. So breakdown through the 188 could be that breakdown through 185 today, and then a move hit down. And recently we just got another pop that just rejected the zone, right? So here's another rejection zone, breaks that 205, now going right back towards the 185. We'll look to see if we go to the 180s there in T-Mobile. Of course, this is an area because the growth trade is on, right? And this is no longer the need for the safety trade. We'll look to see if this continues to crumble. All right, looking around in the market out there, watching to see what happens towards the open here. The only one that I'm kind of worried about is MSOS, to give you guys a bonus one. I'm also in this, and you guys see them on the bottom left. I'm looking to see if this can hold here, my entry. I'm in there towards 445. So up to 467, close to 480s. I'm looking for a quick move through 5 in MSOS here as we look for a continued upside move. And then the biggest position that I have right now is in Atom. Actually have a support out. Was able to sell the rip last night into the 1020s in Atom. This was a stock that I was trading on Friday. Got this at $7. You guys can see the position right there, up over 30% on this position. You guys stick around. There might be another 30% gainer right here on, of course, Trade the Pool. Let's get to the Sunrise Report. We'll talk about the action in the market. There's a lot more action for the action today. Look, guys, let's get into it here. Sorry, guys, got distracted there with a little bit of a message, but let's get to the action. Let's go take a look into the Sunrise Report and talk about All right, to get to the Sunrise Report, we also want to get you guys the slides. So let me go ahead and pull this up, talk about what's going on, the catalyst of the week, right? And then we've got to take a look to see what happens this week. This is a big week. This is earnings also. And there will be, of course, the hours to look at, right? The AI CapEx is the focus as we move further into the week. We need to be looking to see what happens. There's 5 Magnificent 7 stocks reporting in the next 4 days, guys. Yes, you heard that right. There's 5. So this is going to be massively important. This is what's going to be shaking up the market, right? We'll be taking a look to see what else is out there, but also WTI hitting 96. Oil getting a little bit of a push up. The S&P 500 is up 9% for the month to date right now, guys. And we need to continue to watch this as the market has handed, of course, the baton to the Hormuz. And we'll see what happens with the information. Of course, back and forth action coming from, of course, the war. Now we're looking like there's a potential truce being sent. Weekend raise, of course, oil, but without the breaking of the ceasefire. So we'll see what happens with those developments. We'll go to also some stocks to kind of take a look at it here. But definitely a lot of action in the market to take a look at, guys. I can't wait to take a look to see what happens towards the open, because there's going to be some stocks moving here, especially with the oil conversation. All right, let's keep going here, guys. You guys can see it here. The S&P 500 at new highs, breaking towards the upside. The market fully erased all the Iran war conversation, fueled by an 18-day semiconductor rally, right? That's really where we're seeing the strength. Now, the updates, of course, the structural floor. The market is pricing in this stance off right now between the threat, right? It's oil, it's WTI. On Friday, U.S. military ordered to shoot to kill Iran's small boats in the Strait. Saturday, Iran, they fly to Pakistan, and of course weren't able to get that meeting done. And then the current U.S. envoy trip canceled, of course, indefinitely ceasefire extensions and removed the hard expiration dates. So things that we need to kind of look into. Right, so let's keep going. Let's talk a little bit more about it. Let's get to the action here. We're going to talk a little bit about some Domino's Pizza down here, 4% in the pre-market. Yes, Domino's, baby. Domino's is down after it fell after issuing the U.S. same-store sales growth outlook of 0.9%, well below the 2.3% analyst consensus. This miss, of course, adds to the growing body of Q1 evidence for lower-income consumer stress. Domino's is a direct read on discretionary delivery spending and guidance thus far, of course, falling below the expectations, signaling that their fuel costs and elevated price and wage pressures are reducing order frequency among its core customer base. The pattern, of course, PepsiCo, Constellation Brands, Capital One, now Domino's, is consistent enough to be a theme, not a coincidence, as we're seeing, of course, consumers showing a little bit of some hit on the downside. We'll talk a little bit more about that action. Let's keep going as we take a look into some more action. Wednesday after the bell, of course, we get these 4 companies, and then Thursday, Apple reports. This is the big conversation, right? This is what we'll be looking at. We'll be talking all about the CapEx spending. What happens to these names, right? Meta, Alphabet, Microsoft, Amazon. Tons of names and core questions to be asked, right? Well, there you guys have it. We'll be talking all about Meta. Can the ad platform sustain the 32% year-over-year rally and continue on this push? Alphabet, is the AI growth revenue growing fast enough to justify the CapEx? And then for Microsoft, Azure, does it show 40% cloud growth while defending margins? And is AWS gaining shares? Or is Azure AI pulling the enterprise workload? We'll see what happens here, but definitely pay attention to kind of take a look at what's going on in the CapEx spend. The semiconductor statement, of course, these have been one of the massive runs, right? Friday saw a historic run in Intel. It was historic indeed. It's been one of the biggest moves there in the market as of late. It was a nice 23% surge, cleared the dot-com era highs for the first time since 2000. Yes, Intel is sexy again. And who gave you that name way before, guys? At 25 is when I was mentioning Intel was going to change things up here. Boy, did I get it wrong, though. I thought 65 was the top. Now we're trading well over 65. So we'll see what happens on these names. We got more to talk about in the space. Let's go to the AI chip war, talk about what's going on as we're seeing more and more the battleground established. TSMC, Marvell, and NVIDIA. The consumer device layer, right? The frontier. And the frontier is now looking into what's going on with Qualcomm and Apple. Apple is down here 1.5%. It declined on the same CUDA report. Apple's competitive moat is a consumer AI hardware reset on its custom silicon leadership, the A series and M series chip, which delivered performance and efficiency advantages no Android rival has replicated. An OpenAI and Qualcomm partnership, though, is the first credible challenge to the position of the AI software side. So Qualcomm coming in here, trying to disrupt this situation. Right now, of course, this is a partnership with Qualcomm and OpenAI that we need to keep our eyes open to. Pre-market movers, of course, Qualcomm, the most significant design to win in history as potential platform level shift in smartphone AI going towards what? Qualcomm chips and OpenAI phone? Hey, let me know. Or would you guys be interested in an OpenAI phone? It'd be great to hear from you guys. Other pre-market moves to kind of take a look into, of course, Apple, Adobe, and Domino's. We've talked about two of these, so let's talk about Adobe here, as it down 29% year to date, downgraded to neutral here. So getting a downgrade doesn't help them, right? They've already been hurt here. So now down more than 1%. It's citing increased competitive alternatives to Adobe's credited document products and the risks that strategic acquisitions or investments needed to respond to the AI competition could compress margins even further. Adobe has already declined more than 29% year to date, and the downgrade formalizes the market's existing concern that generative AI tools are now eroding the moat that sustained Adobe's subscription pricing model. That company has not yet demonstrated a clear path to recapturing it. So Adobe continuing the downside hit and not looking good. Of course, this the look into the report and to the market, right? We'll be taking a look to see what happens as four big names report. There's four beats with raised guidances going into this. And then, of course, one guidance cut. We'll see what happens. A lot to take a look into as we get into the report. All right, we'll talk more about the action there as we keep it going here. We'll talk about that. We'll talk all about it when we get, of course, Michael Noss on it. Let's go back towards the actual outlook here of the stock charts and talk about what's going on in the SPY right now as we speak. That's the outlook for the Sunrise report. Let's go take a look to see what's happening in the trading action. All right, guys, it's about 8:57. We'll be joined by Michael Noss in just about 2 or 3 minutes here. But seeing the action as the SPY is bouncing a little bit, looking to see if I'm going to take some money and run. But nice action here on the swing account, guys. So looking to continue to ride this Atom, Cleveland Cliff, USFD, MSOS. We'll see. Can we continue to win in this market? We've been doing really well as of late. I always like when we get back into the trending market. Seems like the trading has gotten back towards the easy side of things, and it's good to see. What's going on? How we doing out there, Snowman? You're interested in the OpenAI phone? Hey, can't blame you. I definitely will be taking a look at that. And make sure that you're taking a look into the Discord, guys, because that's really where the Sunrise Report and the Playbook live every single day. And look for more, our education, our special insights, courses, everything that we're going to do. It's going to be behind that Discord. So if you're not in our Discord, you're missing out on information that could help you get to success. If you're looking for education, you're looking to learn, the Discord is the place for you. All right, we'll keep going, guys. We'll keep pushing to the next level. Discord is king. Yes, it is. It's the king. The king is here. Discord. Get to it, guys, and look forward, man, because I'm going to be kind of developing it. We're going to be making big adjustments to the Discord coming soon, really improving the way that it functions and gives you guys more value. I want you guys to be able to learn from the Discord. I want you guys to be able to talk about trades nonstop, and I want the action to be there. So you guys out there, let me know, have you been in the Discord? If you haven't, or have some feedback for us, let us know, because we're working on it right now as we speak. All right, let's keep taking a look out there in the market. Let's take a look to see what's going on right now. The market is still dropping. A little part of me thinking that we're going to get this semiconductor pullback. So I might take a shot on SMH to the short side today. It already did bounce a couple of times. So right out the gates, it will be an interesting action to see if we get any bounce into this area and rejections. I'm not going to chase, right? That's clearly not probably the move here because you'd be shorting kind of the strongest areas in the market right now. But it just seems like we're just due for a little bit of a pullback. Look at the SMH on the daily. You can see how extended it is. You can see how it's breaking kind of that new high all the way up at the top. Doesn't mean that I don't like these names at all. It's just more, it just feels like the market's ready to just pull back a little bit. We'll see what happens out the gates. I'm not going to get into I'm going to short game. I'm going to be waiting here to see what happens, but definitely we could get some early weakness into the week and then some later strength. It's going to be a lot of flipping, of course. We got FOMC to talk about this week, but really I don't think too many people care about the economic data. It's more focused about what goes on those earnings Wednesday and Thursday. But enough conversation about that. Let's get to the action side of things. Smash that like out there if you guys are joining in on YouTube, and let's bring on the man, Michael Noss. How you doing, man? Ooh, the good old EV Mux said, no, no, no. You must adjust before you come on.
Better now?
Yes.
Turn it off. I did it when I was in the back anyway.
No.
You got to come on first, and then you got to do. There's a sequence to this, but
Sequence.
yeah, so far so good. I'm seeing the market kind of barely moving out there, which is fine. I think I'm kind of with you. As you were mentioning that you could get a little bit of weakness. I'm thinking more chop early in the week. I was just looking through the economic calendar, and there's not a lot. Like if we go here, there's really nothing today that we care about. There's not much tomorrow that we care about. And then Wednesday things start to pick up. So you take this and then you grab the earnings calendar and you can start to see, Wednesdays, it looks like a cluster of events, things like that. And then with the SPY, right, we just haven't done anything in like now 6 days. A little bit of a breakout. So if we fade back in and we just get back inside this range, that's fine. I don't know if this is that's a breakout enough that I would even really classify it too much. We got like a couple ticks over this prior high. It just feels like things are just not overdone, but we've had the move, right? The move's happened.
Oh, yeah.
So now we could potentially do a little bit of a chop. And if you miss the move, it's unfortunate to you. And I was looking at the commitment of traders data a bit, and it kind of lines up as well. Again, we're going to be showing this, I think, more and more. So let me just describe, right? We're always interested in the red line, which is the large speculators. These are the guys who are wrong. The guys who are right are usually the commercial hedgers. Right? They're working in the industry that the future's a part of, and they have as close as you can get to insider information without going to jail. And then this red line, this is just, again, the commercial hedgers. Or the large speculators. And these guys, we can just go look at some recent examples. If you were hanging out with us last year, I was pounding the table the whole way up that this rally was going to continue. I was getting a lot of people squawking in my ear about tariffs or whatever. But the point was that these guys were short hundreds of thousands of contracts, and they shorted more here on the way up, right? So we can make that even a little bit bigger, and we can get that maybe down out of the way. Can we? No. But so we have this very easy to understand picture of where are the wrong guys? Right? Where are the people who are wrong all the time? Where are they leveraged? And I think that's a huge kind of superpower that we have. So when I was going through this on the weekend, I noticed that they, as of last week, were still short. That's great to me. They're not nearly as short as they were during the last rally, but they're still short the S&P 500. And then they actually even sold some of the Nasdaq. Generally, people you see they're long the Nasdaq. Even when they were short the S&P 500, they were long the Nasdaq last year. But now they've actually sold a little bit more out of the Nasdaq. So, I really am super interested in positioning in extremes. And we're not really there across the board, but the wrong people are still short. And then, so with oil, right, we talked about this, they never short oil because commercial hedgers are never long oil. They're always selling futures contracts out for oil because it's how they hedge their business. But they were the least amount of long that they ever were down here at $55. And then, of course, that happened. So now that they're buying more and more contracts and they're very, very long this oil, that makes me think that potentially this head and shoulders might come to fruition because everybody's betting that oil is going to go higher. And as soon as everyone's betting oil is going to go higher, this is the contrary nature of me. Only the last thing I wanted to look at here was Bitcoin. So Bitcoin, this is the thing that kind of concerns me a little bit, is I'm looking for this base to break out and potentially push higher. And I think there's a lot of people that are doing that as well. We've been in this space for a long period of time. But if you look at who is buying the breakout, it is these large traders again. It's the guys who are always wrong. They're buying this particular breakout on oil where the commercial hedgers, in this case, you could think commercial hedgers being mining companies would be the easiest way to put it. These people mine crypto and then they need to sell it. So it is in their best interest to lock in if they think they think Bitcoin's going to go lower, and these are the people in the industry and kind of understand what's going on, it would make sense that they would sell futures contracts so that they can kind of lock in their price of Bitcoin, which means that if Bitcoin moves lower, well, the Bitcoin that they mine is going to be worth less, but the Bitcoin that the short contract that they have will make up for that. So there's a hedge kind of back and forth there. And they are shorting more and more Bitcoin into this rally. And that to me is a little bit worrisome, because if you look back, so now we're focusing on the green line, the hedgers. If you look back, they were buying in this area. They flipped long kind of right here from short, and they owned Bitcoin the entire time. And then they actually flipped short right at the top, right? Does 100,000. That's where they started to get out of their position. And then if you go back even further, right, they only got long on this breakout. So these commercial hedgers, especially in Bitcoin, have been insanely accurate. And they're saying that Bitcoin could be topping out here, which is unfortunate because I wanted to go higher, but that's what the data is telling me. So that's what I've got to keep an eye on. So maybe I will also buy some protection against some of the crypto positions I have, because the smartest people in the room. And that was the main thing that I saw from positioning. Everything else is kind of muted, and just like sentiment, when there is no signal, you want to kind of ignore it. So sentiment's just a little bit in the middle. You kind of want to hang out, but that's what I'm seeing from the Commitment Trader report this week. Again, this comes out every Friday is when they update the data, so I'll probably be popping in here each and every Monday to chat with you guys about where the money is positioned and what are they doing, what are they buying and selling here.
All right, definitely something to kind of take a look into, and we'll see what happens in the COT data to see if we get some change in there. Of course, we'll be joined by Jane in just a second here, and taking a look to see if the markets can hang on. IGV definitely the weak area of the market in tech, and
down 1% with the rest of the indices flat. Essentially,
this is why I don't like catching falling knives, and I rather go with the relative strength. And this clear example why. Sometimes you can get a lot of chop in these trades. Yes, a lot of traders have thought they've had it pegged when they've gotten some good trades in between here, but the truth is, where have we gone in the last 2 or 3 months? Really nowhere, right? We're stuck in this range, right? And it gets expanded too. There's like breaks at the bottom, there's breaks at the top. Really unclear structure if you look at this technically.
Well, I'm still holding mine, right? I'm in from 78 here. I've got my original stop in place. I'll keep this until it stops me or until this is reversing. But you're right. It's just because the down move seems to be done doesn't necessarily mean there has to be an up move, right?
Exactly.
Sometimes these conditions can just kind of become nightmarishly choppy in which you're going. So it's why buying the breakouts of these areas can sometimes be really, really hard, because they can look like they're going to break and then crash back down, look like they're going to break, crash back down, kind of over and over again. So it's why I kind of took my shot here.
Yeah, same thing on the short side, right? The shorts think they got it. It goes down, it goes further up, right back up. Right.
Well, and that's why people like, and I do myself, these, whatever the kids are calling them today, liquidity grabs or ICT, whatever nonsense. But in my day, they were just bear traps, right? You look at that, you say, okay, you break a support just briefly, then you rip back through. That's like as typical as you can get to a bear trap, and then we push to the high. Again, this still looks like, to me, if we do like the Wyckoff accumulation stuff, it still does look like that. And same as we were talking about, what was it, UNH? We were talking about Wyckoff accumulation. And I'll grab the schematic here, but it's the same idea in which you've got a pretty clean area of support. You break that and you retake it a little bit later, and then you come back up to the highs. That's why I missed the gap, but I bought some a little bit on this breakout right here, and that's been fantastic. But it's starting to look like a little bit like that, right? And so that's why I took the trade. I took the shot, and I took it on this candle close right here. So like $78. And then I've got my stop down here like 73. So it's one of those, it becomes a pretty basic math equation after that. And I'm do I think there's a chance that I can get 20 points or 10 points? Well, up here it was already up 10 points. So that's very easy to achieve. We break out, can I get 20 points? Well, now we're talking 4 times my risk. If we even ever, which I don't think we will anytime soon, get back to the high, that would be like a like 20-hour trade. I'm just looking to see what will happen in the low 90s, kind of take my money and run. I sold a little bit into this pop, and now if we get back and we hold, but let me get this Wyckoff accumulation thing. These are fascinating to me because these were done ages and ages and ages ago. Right? This would be an interesting little segment maybe we'll do. Right, so this guy passed away in 1934, so almost 100 years ago, and he was drawing out these kind of schematics of the market that people still to this day kind of use. And these aren't to be followed like one for one, like this is how markets move or something. It was just kind of like him saying, I notice at bottoms, you often get what he called the spring. Right? That's what, again, it seems to change names every couple of years, but it's the same principle over and over again, in which you have some break of a support area, and then it comes back up to the resistance, and it hangs out for a little bit, and then continues its uptrend. We talked about Stan Weinstein and his cycle analysis. This would be a phase 1, I guess he would call it, and then the breakout is the phase 2, and that's what he likes to trade. I know there's some people, I like these low bases as well, especially if you can get in here, because the idea is, for me, I just look at that as, if I'm right half the time, if I'm right less than half the time, well, you get this undercut and then rip back through, perfect, right? That's amazing. So if I get a 40% win rate on these, and my risk is, so on IVG, I have bought like essentially right here, if this schematic holds through, and my risk is down here. So this tiny risk, to compare to what could happen if you end up catching these bottoms, ends up being a great trade. Now you have to sit and you have to hang out in them, like we talked about these bottoms, and like the schematic talks about, they're not like V bottoms that just rip to new highs. They are low bases that can take a long period of time. So it means you're hanging out for a bit. So if you're looking for the quick scalp, it's probably, right, take the spring and then sell on any up move and move on with your life. If you're looking for kind of a longer term kind of trade that you can really stack the risk reward, well, you're hoping that it gets to these highs right here and then breaks out and creates a whole new uptrend. But if, now that you've absorbed this in your brain for a bit, right, go back to this. And to me, it looks right now kind of the same, where you have that undercut, right? So you can look, let's just, right? So support, and then spring. That's what we're looking at. And then support, and then that spring right there. And then when it gets to the high, it's supposed to chop around for a while. Well, it got back to the high, and it's chopping around for a while. That's what that resistance line up here is. So far, looking pretty textbook. I hope it happens like UNH, but it's an ETF. So there's really no world in which it happens like UNH and just kind of rips into the moon. Like, that's just not the way it's going to work. However, it could. So, again, that 50% win rate. If I had gotten UNH down here at 270 and you're up 100 points on the trade, or like 30% on a giant boring stock, that's great. And if you did a UNHG, you'd be up like 60 or 100% on that same move. So interesting pattern to look at. And this is something that I think could work. Day trading, swing trading, all of that. Of course, the devil's in the details. The nuance is what's important when it comes to these. But again, interesting pattern in the whole Wyckoff thing to look at. I've been working on systematic strategies for these for ages. It just becomes, the more it's pattern based, the harder it is to build systematically. The more it's indicator based, the easier it is to build systematically.
Yeah, definitely difficult when you're combining those types of things. You got to keep building, guys. We'll see what happens. We'll see what happens towards the open here. It's 9:15. We'll talk about what's driving the market in just about 5 minutes here. Taking a look around to see if there's anything standing out, and definitely extended trades
Chat's talking
out
about
there.
Microsoft news.
Let's take a look here.
Let's look.
I didn't see any new one,
Oh, yeah.
at least that I saw there, but something happened there. So let's go
Something.
take a look here.
Let me
I'll
go
pull
to
it
look
up
on
here.
this
It won't
trade
take me
too.
too long. It won't take me too long,
But-
right?
Yeah, we've that's a big candle, right? All the way down and then all the way back up. So whatever's going
OpenAI
on.
shakes up partnership with Microsoft, capping revenue share here. Looks like OpenAI and Microsoft on Monday announced a revamped partnership agreement that will allow artificial intelligence company to serve customers across the cloud provider. Today, we're announcing an amended agreement to simplify our partnership, the way that we work together, grounded in flexibility, certainty, and focused on delivering the benefits of AI broadly, said OpenAI in a blog post. So let me pull up that blog post here a little bit more. So pretty much it says that Microsoft remains OpenAI's primary cloud partner, and OpenAI products will ship first on Azure unless Microsoft cannot or chooses to support the necessary capacities. OpenAI can now serve all its products to customers across any cloud provider. So big down hit there for Microsoft, and a negative. Pretty much in Microsoft admitting that they can't meet the capacities that OpenAI wants. And at certain times OpenAI, it wants to go to other players. This is their way of working around their agreement. Microsoft will continue to have license to OpenAI's IP for models and products through 2032. Microsoft license will now be non-exclusive though. Big change there. Microsoft will no longer pay a revenue share to OpenAI though. That's a nice plus to Microsoft. Revenue share payments of OpenAI to Microsoft continued through 2030, independent of OpenAI's technology progress at the same percentage, but subject to total cap. Microsoft continues to participate directly in OpenAI's growth as a major shareholder. So there you guys have it.
That's what,
big adjustments coming
like
to
while
it.
you're reading that, I'm like, okay, so the fact that they don't need to use Microsoft services, like that's a negative. However, they also own them, like a large chunk of them. So if they're out there making a ton of money because they can, a ton more money because they can use a whole bunch of other people's services, that's positive. That's probably why we're seeing the reaction that we were, where there was, like, if we go to like a 1 minute chart, there was a huge dump right off the bat, and now we've taken kind of most of it there, because it's one of those weird things where it's like, okay, you can't use our services, but then you also own us. So right? And if we're using other people's services and making a ton of money, you're going to get a benefit from that, right?
Yeah, another thought process from that, right, is you go immediately to the other cloud providers. Who's getting the OpenAI business? Look how Amazon got the jump there to 267, now pulling back. Take a look into Google. It got a little bit of a jump there. Why are they getting the jump? Well, they want to know, where are they going to take it, right? So you see Google here getting the jump. Look at Amazon getting the jump. What is it? Well, it's the question. Well, what's the next best cloud provider? Well, it'd be AWS. Let's just be honest. And then from there, you probably work down the line. Google Cloud, right? And so you work down the line.
You know what I mean? Like with Google, because they've got their own Gemini thing. If they're using, like, would you want to promote your or help your biggest competition, like the thing that you're worried about that's going to take all your like search share? Like, I don't know.
Yeah, it's all about if you have the capacity. If you have an abundance, Michael, you will sell it, right? Let's just be honest, right? It's that kind of mentality thinking, I think, here, because this is not like a partnership that has to last. It's just more, can you meet the demand, right? It's OpenAI admitting, I think, more and more that there's not enough capacity out there. They want to grow. There's not enough out there. The data problem, right? The data center building problem. I think that if anything, this tells us more and more these data centers, they need them fast and faster.
So what's that? Iron would be a...
So this is kind of like another thing to look into the trade, right? Thinking about data center build outs, things like that, and looking to see how those trades react today, right? So we'll see what happens with trades like IREN. IREN's been on a nice daily breakout. Independent power producers, things like that, construction companies. We'll be watching to see any action come from those. But of course, Microsoft directly impacted here, coming down and then bouncing right back up, right? So it seems like we got that quick dip on the news, and now they're kind of digesting it. We'll see if this starts to bring a little bit of some sour turn towards the trade. Of course, we had the OpenAI conversation. So it looks like OpenAI and Qualcomm are in talks to potentially make an OpenAI phone that would be powered by Qualcomm chips. And so that's why Qualcomm's on the run. But just to give you guys like the positive story in tech, and then maybe we'll call this the negative story. Really not a negative story, more along supply and demand issue.
Yeah, and just looking through here with right, so now the MAGS is down 0.5%, right? So the Mag 7 getting pulled down by that Microsoft news, and that's, you know, just component wise, that'll be a big component for the SPY and the Qs. Not so much a big deal when it comes to you know, RSP or your average stock. They're going to be just fine based on all this. But when it comes to those different areas, the you know, your big cap tech names are probably going to get dragged down with the news. So you have to go and take a look, unless Amazon offsets it. But Microsoft, again, a huge company, so just index effects, it's going to be a big one.
Yeah, they usually end up looking at some value trade to kind of buy it up. We'll see what happens there. Now let's talk about what's driving the market. Of course, leading into the market here, we need to be looking at what happens, right? It's the big week, of course, of earnings. That's going to be, of course, the biggest focus going into the week. But you will also be taking a look to see what happens, of course, from the war conversation and oil overall. We did get a spike in oil, but then, of course, as there's more conversation that the strait could be reopened, you know, we'll see what happens there. Of course, it's Alphabet, Meta, Microsoft, Amazon that report Wednesday after the bell, and then Apple reports on Thursday. 5 of the Magnificent 7 in 4 days. It's a massive week, of course. Trump, of course, ordered shoot to kill for Iranian small boats on Friday. Back and forth action in the war. Qualcomm up 12% on OpenAI smart chip conversation. Apple down off of this, and then more conversation coming in with OpenAI this morning. Intel up 2.5%, extending Friday's historic 23% rally. The semiconductors was on an 18-day win streak. Will today be the cut of that 18 win streak? That's where I'd kind of kick it to Michael. What do you think? Is today the end of that 18-day streak on the SMH? A little part of me is thinking about taking that bet.
It's one of, it just shows the
18 days,
how
Michael.
hard it is to short, just because it's obvious from, you know, after like 5 days up in a row that it has to end. And then the question is just how long. It's the same thing with car, right? It's, you have to almost be able to time it intraday, because this thing's down like 90-something% after that move. But you could have said that
a little better quality,
day 5,
though, maybe
day 6,
run
day 7, you know.
But yeah, a crazy,
Are you muted,
insane
or am I
run.
muted? So more one of us muted?
One of us?
I don't hear you. So if it's me, then it's me. I'll keep talking while we wait for the producer to sort out. But
we'll stand on top of you, my friend.
Maybe turn your thing back off and on again. But yeah, SMH is looking good here. It's looking interesting. It's holding strong. But yeah, it's just, it has to at some point. Right now we're up, very slightly. And we've got a huge area here on yesterday's kind of low, yesterday's base there. So we just need to see if it holds today. I like that, you know, for the short side, I like the fact that we're down 5 points from the high here. And huge push up, 515, and then all the way back down to 509. That puts us right in line with this high. So I think that's your area. If you break there, then you could take a shot. And there's the triple leverage dudes, right? And those are SO. I know TAC trades them all the time. SOX. There it is. SOXS and SOXL. If you want to take the shot. Fox. Because if you look at this chart, you got to ignore this. This is just a reverse split here, but this is SOSX before that.
I like
from
the SOXS.
$50 down to 13. So if you're going to get a bit of a reversal, you're going to you're going to see that happen, right? You're going to see that reversal kind of pop through, and you're going to get triple the juice on this. And this is one of the things I love about trading stocks, right, as opposed to futures and things like that, is that you can get that juice just in the stock market by saying, I'm just going to take 3 times instead of take the normal one.
I like this. I'm going to look for an undercut and
Are
rally
you
back
back, Mitch?
through.
I still don't hear you.
Oh, good Lord.
I still got nothing from you.
Well, you talk, I talk, we all talk.
See what's going on here. Is it me or is it you? Which one? I'm just like, let's do hand signs. I don't know. Am I broken or are you broken? Just type in the WhatsApp because I can't hear you. Chat, help us out here.
I think it's you. I think it's your ears.
I don't know which one is being evil to. Hold on. I can message him. This is a comedy of error. Where's the message button? I want to refresh. I don't know what's going on. Producer, can you help us out here? One of us is busted. I don't know if it's me or him.
This guy.
Okay, it's me. All right.
It's this guy.
Bye.
All right, guys, we'll come back to my screen here, and we'll get Michael Moss back in just a second here. But yeah, looking to see what happens here with Success. I would love a dip to like 1330. So that's going to be the area where I'm going to be looking for a nice little dip opportunity. We'll see if we get that opportunity there. 1330s, kind of the area where I'll be looking to see if I can get a little bit of a dip buy. Can we get it? Success, dip buy. We'll see if we get it there. All right. Can you hear me?
All right, I can hear you now.
Oh, you're back.
What is going on? It just like, so yeah, if chat could hear you, it just cut me out. And okay. So I see the chat now, but that stopped as well. So
this is going to be fun.
Cursed.
So, Michael, I said, I'm going to look for like that undercut and rally on the Success, right? Because I think too many traders are like me and you. They're also like, yeah, this has to stop at some point. But I think some people will jump way too quickly out the gates. Another telling sign, look at that 1360 order here, 17,000 shares waiting right there. And then a 1344, 17,000 shares. More and more, I think I've been trying to look at those types of things. Those are like pockets of volume, right? And a lot of people talk about these in like kind of volume profile mentality, right? A lot of times you'll get like kind of magnets towards those big orders. Let's see if we can get that dip back through the support and then the rip back towards that high, right? So I'm going to look for a quick wash, a quick rip, looking like, hey, everybody, it's still the go buy everything semiconductor market. And then all of a sudden, a little bit of some pullback, right? We'll see what happens here.
Well, and
the truth is,
like,
I think we both say that it's still strength. It would just be more of an extended kind of short.
Yeah, it's
right.
It's profit taking, right? But the and CAR is a good example, right? If you took an opening range breakdown or a fake out on CAR, you got it slapped like 3 or 4 times. Then when you got it, it was, and it might be the same thing, right? You might need to get messed around a little bit first, then okay, now we can finally go, right? See, they don't make it easy on you. It's probably the best way to put it. So just, have your plan. I like the look of, I was saying, I like the look of the, what it looked like in kind of the pre-market. And you got that kind of double top, I guess you could call it, or double bottom in the thing. We're opening right here now.
There we go. Ding, ding, ding. Have fun, guys. We'll see what happens. First watch for me is going to watch to see is protection, right? USFD, and then also watching Cleveland Cliff for some continued takeoff here. Cleveland Cliff, one that I bought on Friday, Michael. Look at that one. Nice little rip right here, right out the gates, right back to the upside. Steel's been a hot area, so going to look to see if steel can continue hot. AU also giving me an alert there, looking to see what happens there in AU and gold. That's a dip coming right back down, but Cleveland Cliff, nice little rip right out the gates here to 1060s. Going to set a stop there towards the 1020s, but nice push higher. Cleveland Cliff, steel, baby.
IWM is looking great here. So your small caps, your mom and pa companies, they're up right off the gate and up a 0.25%, even with the SPY and the Qs down just ever so slightly. So, that just shows, right? Is it big cap tech, or is it, again, the real companies, your industrials, your biotechs, that type of thing?
Steel, nice push here, guys. Nice stocks that are leading there. You got Cleveland-Cliff, the leading up 4.46%, up 10.96%, guys. I'm up over 16% on this name already here, guys. Gonna sell some into this rip, right? Let's go ahead. Let's not be greedy here. Let's go ahead and sell some into the rip here. Cleveland-Cliff, let's have our first sell of the day. Let's go. Let's take some money. Boom. And then SOXS already taken off there now towards 1375. Didn't get back to my 1330s buy. I had it out there. It went to 13. What do we got there? Low of 41. So missed it by 10, 11 cents on the dip buy. That's okay. Now I'll look for some pullbacks, but definitely SOXS getting a nice little push. And what is this? The pullback coming into the market quickly here.
And then
I'm going to look for a test down.
IWM just ripping here off the gate, right? So just pay attention, right? We're getting that. Again, these are the mom and pop companies, your regional banks, biotechs, small industrial companies.
Broadening out of the rally right out the gates here, Michael. I'm seeing now healthcare up big, financials up big. That's why the SPY is having a decent rip here. Communications up big, energy up big, industrials up big. What's lagging? Technologies in the red, utilities on the red, and defensives just barely making a move up. So where you're seeing the strength is really in the industrials, healthcare. That leads the market, financials. So those three sectors look really good today, right out the gates here for me, to give you guys a quick look into the market, right? There's a lot of times you're going to make quick calls. For me, that's the call. Look at the XLF chart. Look at those charts. Look at the ETFs. They'll stand out to you guys. You see it on the XLF here. I'll show you guys it right now. XLF, you can see XLF, big drive right out the gates, right? XLV, big drive, recovering from that quick little dip right out the gates there. Then you look at the XLI, right? Oil down, holding right out the gates up. This is why I try to give you guys sectors really quickly. And then we got to look at industries to see which industries are hot. We can ride trends daily based on this. This is like sector rotation within the day itself, like intraday sector rotation. There's always a flavor of the day. Find that flavor of ice cream that you like. XLI, you see how that pushes? Boom.
There's one simple way to look at it, and we look at this all the time. So I'm just going to show you guys like two charts. So here's the Qs, right? And you can see at lows, breaking down to lows, all of that. And then here's the RSP. This is the average large cap stock. You could also do, I guess, QQQE. That's probably a better one to show you guys. So the Qs are weighted to large cap tech. You're going to have, no volume there, never mind. You're going to have large cap tech take up a majority of what is going to happen in the Qs. You could have, of the 100 stocks, you could have 900 stocks or of 90 stocks doing well. But if then those big top 10 ones are getting killed, you get a chart like that. So how do you know what that's going to happen without looking at all the individual stocks? Is pick an equal weighted sector, right? So you take a look, you could do the SPY or even the Qs, and you say, okay, down to flat on the day. And then you take a look at RSP, which is the same stocks, just not weighted to large cap tech. And this was doing great.
With a nice takeoff.
Right. And then you got to look at what's the difference, right? What is, if the SPY is going down and RSP is going up, and they're the same stocks, just weighted differently, it tells you industrials, healthcare, financials,
SMR,
less of the big cap tech kind of things.
I like SMR, NNE on recoveries here on the daily 90 MAs. So I like the NNE chart. I'm trying to get an entry here on NNE around the 25s or below. So I'm looking for pullbacks in NNE now to try to get in.
Yeah, and the SPY is exactly flat. Just FYI, like exactly flat, not up or down. So just know that you're in an environment in which is exactly flat. So you just kind of have to hang out and wait.
Looking at the action here and looking at what's leading the last 5 minutes here: industrials, cyclicals, healthcare, financials, and basic materials. Basic materials having a really good day, and a name that I liked, LEU, got stopped out on Friday on this pullback. It was right around the 90 MA. I had the risk there a little bit too close and got cut. Now it's ripping right back to the upside. LEU, big rip to the upside here. Nice move in the metals and minerals name there. Uranium name's doing well, so just want to call that out. Uranium's doing well there. UEC, big rip above the 15s today. I love that look now. I'm looking for any dip there to try to get some UEC. And then you see the uranium theme is one theme that I can see right out the gates here today, which I'm willing to take, right? So
there's an ETF for all those. I got to remember, like the small nuclear reactor plays.
I'm going to take a small entrance there in UEC, but really looking to add on pullbacks below 15. So this is like the smallest piece. It's like a fourth of what I would put in, but I don't want to miss the rally. So I'll go with like a fourth, like runner position, right? Where it's like, and the fourth size, I can hold towards the low today. Now, if it was a full size position, could I have attacked it like that? No. So this is how I'm going to UEC today, and I'll look for pullbacks to get in. Sometimes you can't get a full size position. Don't chase, don't go full size. Maybe you quarter it down and you give yourself room, right? For ads, at least for me, right? Because I want the name, I want it. I also want it at a discounted price, right? So I need to be patient.
Especially, for discretionary traders, like a Monday's got to be very important. Like for just like headspace, for just like, you have to be able to go in with that patience on Monday, because as the week goes on, it's going to get harder and harder. So if on Monday, you're kind of setting, I guess, a bad tone without going into like too much psychology kind of talk. If you're setting a bad tone for the week by just chasing and YOLOing in and doing things like that, I think that could be problematic, right?
Yep,
No, not URNM. There's let me look here. There's an ETF for just the small nuclear reactors. Oh, NLR is the one that I was thinking about. There's probably another one. But yeah, NLR is if you just want to know like what people think about nuclear, this is a great ETF for it, because it's got the small nuclear guys in it, it's got the big nuclear guys in it, and it has some uranium. So it's got your CEGs, your GEVs, but then it also has your NNEs, your SMRs, your OCLOs, all of that. And I was actually looking at this on the weekend. That's a nice looking chart. Like that's like cup and handly or double bottomy, whatever you want to call it. But it does look like we could get a nice little breakout of here, is like another leg in the whole nuclear sector again, the whole nuclear talk.
Yeah, CEG's one name that I'm going to wait for an early pullback in the week. We'll see what happens. LEU is a really nice uranium name. I love that name because of the long-term pullback. So I'm looking for stocks also that have had pullbacks. Like LEU has essentially been you'd be breaking like a 2-year trend right back to the upside. I love things like that, right? So, um, you're getting more of that lag effect off the 200 for the LEU trade. But you can look at so many uranium names, and there's the ETFs, right? The URA. URA is another one that looks really good right now. And that gives you access to SMR. That gives you access to OCLO. That gives you access to LEU. That gives you access to NNE, UEC, and URG. That makes me want to get into it, to tell you the truth. Try to get some
the
pullback
Musk
here.
versus Sam Altman trial begins today. That's his $134 billion lawsuit. Holy smokes.
Trying to grab some of the URA guys. URA, trying to grab some URA there at the 56.20s, and 56 is going to be my mentality. So if I can average in between there, I would love to grab this pullback to 56 on URA. Let's see if I can get it, man. I don't want to jump on this one. This one's more like, come down to my levels. I'll get fills if it comes down.
Yeah, and commodities like URA are big, right? They're spicy. I find if you chase commodities, I've probably gotten slapped more than chasing commodities than pretty much any other asset out there.
Want to be smart here
100
and not reach too much.
Saying $167 billion lawsuit. Well, there you go. It's interesting for market related stuff too, right? Because if he's suing OpenAI, right? Microsoft own OpenAI, this whole, so if depending on what happens in this court, and you could look at it, you could probably keep a real close eye on it and maybe make some Microsoft trades because of it. We know that hilariously, both of these people have companies that are IPOing soon. You know, we have OpenAI IPOing soon, and then with Musk, you've got SpaceX IPOing soon. So, you know, it just seems like a lawsuit between two guys, but $130 billion is a big deal. And B, just the fact that these are the companies that the market cares about, that's a big deal as well.
Just trying to get a pullback in that URA to get an entry. We'll see if I do get an entry. Not going to chase, but I really do like the entry if I could get it. It's just going to be smart to play it on pullbacks. Also watching industrials continue to lead here and now pulling back a little bit. Small name to look at is your Hover, HOVR. See that leading at the top there, small name.
Yeah, we have SPY came right up to the top here of the pre-market high. I don't think it's, no, not technically pre-market high, but this pre-market level. It came up there and just rejected pretty strongly from that. Again, nothing we really care about from the economic calendar. There's one orange event with Dallas Fed Manufacturing Index. There's a chart for it if you won't care about any of that, but not a big deal. So what, that's 10:30. I think that's Eastern. Yeah. So yeah, I don't think that's a big deal, but that's something that's going on.
Might cut my US FD position, watching for MSOS to start really the liftoff, guys. It's at 478. I've been in this since 445. Got it on Friday on the 9 EMA pullback after the weakness. Of course, you guys know I sold the rip on cannabis. Literally gave you guys the plan that I was going to buy the dip. Did that on Friday, and now trying to reap the benefit, right? So let's see if cannabis can take off here today. If it takes off today, I think it could really move. Right? So like it's like, Mitch, just be patient, Mitch. Don't run too much. Don't run too fast. Everything's green on the screen right now. Be patient. Calm, grasshopper. Calm little grasshopper.
Well, and we're even seeing, right? So the RSP or IWM was up 0.5%. That's giving it back a bit. RSP's giving it back a bit. Right? SPY hit that high and just is giving it back again a bit. Now, is this a pullback for a reload to break higher, or is it just people are using that area to kind of lean against? I don't know. So we got to keep an eye on there.
Want a little bit of a pullback to 56 here on URA, and I'll take the shot there. SPY, though, is coming back here with that. I'm going to cancel for right now because I think we're going to get a little bit of some quick, wicked pullbacks here. But that could be opportunities in some stocks and it's time to run in other stocks, right? So like, let's say like a Cleveland Cliff, I'm not going to let it break the low today. I'm watching the hourly structure on that swing and I can hold off, let's say like 1020s, right? So I'm already setting the stop on there and just letting it continue to work. It needs to hold that 1020, pull back, and then go right back through the 11s for Cleveland Cliff. And then the key, keep cashing, cash. Focus on the cash and protection in the areas that you need to protect, right? Because that's what's going to be key here. I'm going to downsize here in USFD.
I made some bot updates on the weekend, so that's why I'm just kind of a little laser focused down here. But no, it doesn't look like. Did some testing on the ORB setup. We'll talk about that a bit later. But just turns out that relative volume is the largest key driver I could find from it. So I could go from a ton of trades a day to few. Yeah. What's the RVol? You get to an RVol of like 5 and your profit factor screams through the roof. So I said, screw it. So that's 100%. What we're testing today.
Yeah, R valve. I agree.
Huge.
I
Well,
agree. And another telling sign can be like, Michael, it'd be interesting to test, um, like pockets of volume dropping right before that raise. So not only our vol on the upside, but maybe like a declining factor going into that pop. So the average was kind of declining, and then you got the volume pop. Those create the wicked moves, right? Because there was almost like an illiquidity factor coming in that creates the contraction, right? The contraction of options, the contraction of the Bollinger Bands, and then you get that expansion, right? So that's just like structured thinking, right? And that completely makes sense.
Well, it's also when it comes to day trading, you need to be day trading the stuff that people give a crap about. And so for those who don't know, our vol is basically just means as of this moment, the moment that the trade is entered, it looks back at the last like 14 days for that period of time. So say it enters 5 minutes in, it looks at the last 5-minute candles going back the last 2 weeks or so and says, is this candle done 5 times more volume? So if you want a very simple idea of, hey, do people care about what's going on right now? It's our vol, right? Because you're going to just get that increased volume. It just shows you that people care a little bit more about it. So that's a change that I made there. But I don't know if you looked at it, Mitch, but have you seen SOSX? We were talking about right before the open.
Yeah, we just missed the move, man.
Screaming.
I didn't get the pullback
Yeah.
opportunity, so I wanted to play more the dip buy opportunity. It was more just the rip up, right? But we were looking at the right trade, right? And I think that that's sometimes what you can do as a trader. You also can't go always and just like chase, right? So in this case, I just said, Mitch, just wait. You might get some type of opportunity to still play this. So I'd start expanding away from the 1 minute, be like, no, Mitch, no, stop looking at that 1 minute. It's just going to make you chase this. Now, the 15-minute can make a pullback and then attack those 1350s. That could be an opportunity later in the day, right? But for right now, yeah, the reversal's on, the weakening's there, and now we'll see what happens. URA trying to get an entrance here. Didn't get the entrance there on the pullback. Trying to get one here. Let's see what happens.
Yeah, SPY came down to not pre-market low again, but like the most recent pre-market low, and then bounced. So far today, we had pre-market high, and then fell, and then we had pre-market low, and then we bounced. So we're just between this range. So we're just going to keep focusing on chilling out. We're going to keep focusing on
Patience.
just make sure that we're in the right thing and being patient and waiting for your setup. And there'll definitely be something today. I mean, everything, you always get a move a day. It's just what's happened, right? So
Healthcare is still holding well. If I want to know what's holding well, it's biotechs leading that action. Of course, you got names like Beam and SGMT really ripping higher. SGMT, for those small traders out there, that looks like a great looking chart. Pop today above 8s, so dip below 8s here towards 755 is what makes sense there for me. SGMT, it's a little bit out of my range for swing trade because it's just a high flyer, but it could be a good day trade vehicle, SGMT.
that's crazy. That reversal you can tell the initial move is some bot that read the article, and then you get that dip and people are starting to buy it up here in Microsoft. So if this flips from deep red back to green, it's going to be an interesting little move there on
Quick
Microsoft.
dip there, guys. SPY breaking the lows too, so just be careful out there. I'm seeing the drop there. That's what's keeping me from adding to this URA or getting into the URA right now. It dipped fast there, and I'm glad I canceled out. Did not get my entry here. Still have an entry in uranium that gives me the exposure here. Looking to see if it starts to push back, because right now it looks like it's on the drop. Market's dropping fast here. We just got a quick shift from a break to the high, an attempt to go to new highs 1, 2, 3, 4, 5 times to go above that 714. Now struggling altitude. SOX has jumping. Here's, I think, is where we start to get the pullback, right? Like
Right,
everything's pointing to resistance holding us up.
So then the daily chart. So the question is, on the daily chart here, do we just come all the way back to the low of this base? We got to remember, we've done nothing. This is the closing price on the 17th. So 1, 2, 3, 4, 5, 6, now 7 days. That's almost 2 weeks of action doing nothing. So if we just pull and we come back down into this base, then maybe we go and test the lows, and that's like 701 or so. And me and Mitch have been talking a lot about this 712 level. That was resistance 1, 2 in the pre-market and 3 times here. So if we broke that just briefly and then we break back down through and we give it up, it could be just right back into this kind of choppy base.
Looking out there, took some loss there in UEC, $26 for me. That's not even half of what I normally spend there. But I said I'm going to tighten down and risk here because there's a lot of things collapsing on me and versus what I want to see, right? Which is small pullbacks and the market hold up. If the market was holding up here, let's say SPY near the highs, I would not be in this. I'm not going to buy the dip mentality. But with the SPY doing what it's doing, that tells me be careful, Mitch. Be careful. Doesn't mean that I'm the broken SPY trend or anything right now, but it could give me that opportunity. So it tells me don't go crazy buying the dips.
So where are our pockets of strength, right? So I see XLF at highs, like ripping through highs. So we
Healthcare
want to go
is
look under
leading
the
the
hood.
market,
Healthcare doing
energy,
great.
and financials. Then it goes to the industrial. Like I talked about, the broadening out of the rally is what I'm seeing right now. Healthcare, energy, financials, industrials. Those are big sectors, right? That have money
Ooh,
and that have volume on the day, right? So
kind of like this healthcare chart, this XLV. So this is XLV is obviously driven a lot by like Eli Lilly and names like that, but I kind of like
and
the look of it.
I agree. What I've been saying, Michael, just to give you my eyes on the sector, is we need the major drug manufacturers to take part in the rally. The healthcare
Hmm.
plans have taken off the anchor, right? I started to really use this whole like anchor, like driver mentality because this is how it is in sectors, right? We're not talking about, one stock. We're talking about like a big group of stocks, right? So you have to have that mentality of understanding that. So I think Eli Lilly is one of the names that I'm looking to see if it can turn back around. AbbVie, AZN, Gilead, Bristol Myers, big boys. If those can get going, I think this can rally, right? Medical care is really doing well right now. Just to give you guys mentality on that, I think that's also based on the healthcare plans. Biotechs have already been ripping for a long time. And even you can see this in the ARKG, like the genomics plays. That's
Hmm.
been strong, actually. And it's an area that I think we forgot about because of the war that is coming back into play. So, dare I say it, will the genomic stocks make their comeback? You can see it today in Beam,
Well,
stocks like that.
so yeah, looking at XLV and also looking at Eli Lilly, right? This is a pretty good example of an RSI divergence, right? And the idea being that RSI measures how kind of overbought, oversold you get based off how many candles in a row and the strength of those candles, the up and the downside. And you can see it got all the way down here to like 13 on this sell off. And then we bounce and then we just briefly make a new low there. And we're all the way up at 40. So it just shows that and you can see this by looking at the chart, but it just means the veracity, I guess, of this move was way more than we're seeing in this move right here. So that's one of those moments, divergences are one of the things that I definitely do like, and just
Trying to get
shows,
filled.
not necessarily anything hugely predictive, just saying, hey, it's just it drifted to these lows. It didn't like sell down dramatically the way here it sold. And this was obviously when we had our competition in which I picked healthcare and this other one. But yeah, so we should have started the competition when UNH like went up 30% and Oscar doubled and things like that. That would have been a little bit better. But from here, yeah, I agree. It's Lilly, right? It's Lilly. It's Johnson Johnson. It's some of these names. I don't know how they get going. I don't know if it's like they start buying companies and that gets us excited, or if there's a new drug that they're waiting on that's going to come out, whatever it is. But as soon as these things start to get excited, we already have like the healthcare names, like the UNH we talk about all the time, and like this Oscar has been insane as well. These kind of what MOH. So we just need the drug guys. So that comes with a Lilly. Oh, why?
The majors, the big boys. I think that's what really is missing here, guys. I'm trying to get back into URA. The SPY picked up real quickly. What is that? That's that rotation that we're seeing. That's that energy, financials holding things up, industrials holding things up. Now tech slightly starting to try to turn a little bit. So we could get that SOX pullback here. So keep that mentality here. I'm looking for URA on the pullback.
So yeah, we hit the highs, failed, hit the lows, failed, and now we're testing the highs again. So
Yeah.
now that we've pissed off everybody, maybe we'll go this time.
Also why I'm holding on to that MSOS, right? I
I'm
also
reading
sometimes
something.
think about it in that mentality. If you have exposure to the upside, you don't need to overexpose, guys.
Well, and especially if your exposure is like high beta, right? With like
Yeah.
those sectors, it's high beta. So it means if the market moves up 1%, you're gonna move. This thing's gonna move 2-3%, and go from there. But I'm just reading that there's a White House press briefing at 1 p.m. today.
I'll be
So
back.
I don't know if that means the big guy is going to be there or not. If it's just the press secretary, probably no big deal. But if the big man, and other than that, there's just nothing. Like, so this is just, I can show you. This is my only news source. I talk about this all, again, no affiliation. But when he's just posting over and over again, like big all caps, over and over again, these one-liners, this means that there's a lot of news that's going on out there. And when they're posting the small, or like the ones with the small print, it means he's just trying to fill his timeline with things. And how it's happening is he's basically scrubbing Bloomberg. And Bloomberg's a really big, large, expensive terminal. I'm sure he's why he called himself Walter Bloomberg. And if you have this huge news coming through Bloomberg, then he's going to be sharing that. And if there's no news coming through Bloomberg, he's going to be sharing other stuff. So this is kind of my version of what I used to do back at the prop firms when we had a squawk box, basically a guy who sat on the floor and just auction called what was happening every day, all day. You would hear and you would listen for the crowd in the background to see if there's a lot of excitement or if it's dead. That's one way to look at this as well, is if you're getting like news flow coming out like crazy and then you see the SPY break a technical level either up or down, that might get exciting. It's like, okay, there's some excitement, there's some interest, and we're getting a technical break. Great, I have that momentum behind my trade. If it's just kind of drifting there, then it's like, right, who really cares, right? And that's kind of what we're doing, is we're drifting back up to this resistance. So I would like to see us break through at the same time that there is something that happens, right? Some sort of news drop or something to just kind of push us through pretty quickly, right? We're getting close to this high. This is going to be real important. So I'm watching this real closely to see what happens here, because we rejected from it before. And then if we can hold this time, then these highs, are I put in a bunch of these, but these highs are the ultimate highs. So that's 715. So we have to get through this pretty sizably and pretty quickly in order to get to that overall price of 715. Let me take those out. And that's just, again, show you the platform. I do this sometimes by accident. But yeah, if you go right to the price action, you see this little bell icon pops up. And if you just click on it, there you just set an alert. So if you just want to be alerted, right, these things are great. TradingView's got kind of the same thing where you can just move these alerts around. This is how you can get way more done on one screen. So we got close there, and then we rejected it just a bit. So we'll see. Looking at, I think Microsoft's going to hold the key. So let's go take a look at that as well, just because they're a huge part of this index, and they got smoked here off the open based off that news. Holding in really well. We were way down here at one point. We were way down at 404, and now we're at 420, which doesn't seem like a big move, but for a giant company like this, it's a big news, right? I know JCI, Johnson Controls. That's a nice looking chart too. Nice little kind of cup and then a little handle here and then trying to break out. I know you guys are talking about that. What else are we talking about? Tesla. This might move a bit based off this lawsuit as well. I think it's a personal lawsuit between Elon and OpenAI. So it's not like you're going to have he's going to put the money into Tesla if he wins. He's just going to win $60 billion and just be even richer. But because Musk and Tesla are tied so closely together, it could be one of those things that it moves together. Speaking of, I see something here for Eli Lilly to acquire Ajax Therapeutics for a blood cancer thing. So is that going to move? Is that moving in Lilly at all? Or is that old news? It might be old news. Starting to get very interested just in this healthcare space as a whole. I took it as my YOLO during our last competition, which was a lot of fun, and got slapped pretty hard. I've been doing well in my UNH and my Oscar and these type of things, but the ETF hasn't been participating because these drug makers haven't gone. So I'm going to keep a close eye on these because this might be another area to kick at. I don't think there's a lot of leveraged ETFs though, which is unfortunate because if I can, I'd rather take the bet with the leverage ETF and save the buying power. Short sellers bet against U.S. life insurers to $5 billion. So everyone's betting against life insurance companies. What's that? KIE, I think, is the life insurance. Yeah, it's the S&P 500 insurance ETF. See, this just tells you what a cynic I am. I see that and I instantly go, wonder if I should buy these. Wonder if I should. I had no interest in buying life insurance companies until I read that everyone's betting against them. And I go, that's interesting. Tax says he's heard them doing it in credit default swaps as well. Yeah. That's interesting to me when I look at that chart. Now, again, it's insurance companies, so these aren't going to move a ton. If you get a good trade on an insurance company, you're going to make like 5%. If you get a bad trade in an insurance company, you're going to lose 5%. That's why with these leveraged, that's why I like these leveraged products, is because you can take things that don't move and you can juice them up a bit, and then now you're talking 2-3% if you're right, or losing 2-3% or 2-3 times when you're right and losing 2-3 times when you're wrong. Michael's having some red scalps, you're saying, but if you look at the market, it has actively frustrated both sides of the coin. Right? We've gone up to these highs and down to these lows and kind of upset everybody on both sides. How is the psychedelic sector doing? I haven't checked on it today. PSIL. Again, great interview we had with that guy. You got to look at this in the daily chart. There's not much to it. Up a little bit today. It's really interesting to see because they announced on Friday, I think, who got the first round of vouchers. And I think it was only CMPS that was publicly traded that got one, I think. And I guess they're doing this in stages. So they send out these like emergency use or whatever vouchers, and this is the only one that ended up getting it. And then the rest of them kind of sold off a bit because of it, especially help. It was down quite a bit there. So HTCI. HTCL. I'm not seeing that as a ticker I can get here. HTCO. Whoa, yeah. Careful. That's one of that is the halter du jour. And just so we can kind of look at like how the market's not moving is I keep looking over here at my swing trading feed, and there's nothing today. There's been 0 swing trades that have been pointed out by my system. There's up to 40 potential trades that could happen in a week, and so far there's been 0, and then also 0 day trades. So just with the market doing this, you got to go to where you see the extreme craziness, which is this, or just take a step back. So HTCO is a very interesting one here, in which 13 to 23, it's going to be a halt and a go and a halt and a go, kind of over and over again. What, Domino's Pizza, DPZ? Oh no. Oh, what's going on? People not eating pizza anymore? What's this nonsense? What's the Papa John's?
What's going on, man? It was down because the consumer is not buying their pizza, dude. They don't have the money.
The GLP-1s, maybe they're eating better,
dude. We're talking about a place that does 50% coupons on pizza. You can't buy pizza, dude. We got bigger problems, dude. If we can't buy pizza, dude, we need to do something.
Make your own. Make your own at home.
But I will say,
not me. They'll taste like dung. You can buy a car.
I will say,
car companies. I will say,
pizza price has expanded, though, right? Like, I mean, you used to be able to get a large pizza for like $12. Now a large pizza is like $25. I'm like, what's going on, dude? But yeah.
Well, I remember going, it was back in my day, you go in for a toonie, which is something we have up here in Canada, which is a $2 coin. You'd be able to go in and buy a slice and a Coke and walk off. Back in my day, 5 cents for a bubble gum. I had to walk uphill through the snow. There you go. But yeah, stuff just goes up over time, right?
Yeah, that's just the way it is. Trying to get
Hopefully your income does as well.
URA. The 90 may not cut today. I think I might wait on that URA.
Look at the SPY so far. We are basing like right under this high, just not moving at all. It's like
very algorithmic, if you would tell me. So it tells me that the computers are holding things up right now.
Yeah, they pause the market. I don't know what they're pausing it for, like what we're waiting on, but the market just is like.
Can you guys let me know what's going on here?
Yeah. Could be the press conference thing I saw at 2.
Yeah, press conference.
It could also be, like you mentioned, we really pick up earnings season soon. Like Wednesday, I think, is the bulk of them that we care about.
Wednesday's the day. Wednesday's the day.
So
that's for sure.
Right. So no eco numbers, no earnings we care about. And then all of this happens in 2 days. We could just see more of this where the market just kind of tests. And I think that the reason that we point this out all the time is to kind of help the old me trader and hopefully help some of you guys out with it, where I would just be looking at this market frustrating because I would have taken 10 trades already today, probably would have gotten killed on all of them. And it just like nothing would have gone right. And I would have been down a bunch of money today. And then I go back and I look at the SPY and say, the market didn't do anything. If I just did what the market did, which was nothing, I would have had a better day. Yeah. So other than that, just trade HTCO. Go nuts.
And make sure that you're looking at expanded ranges, not just stuck too close in the range, right? Because then you're just going to get chopped up between the spread right now.
Well, and it was also what we were talking about where, let me see if I can grab the data to show you guys. When I did the testing on the weekend from this opening range break setup, and I just went through it, and I said, and I said, because it's AI, I just said, out of shits and giggles, go and test our vol. And Here it is. Yeah. So this is the strategy, and it just shows that for day trading, you need RVOL. So this is basically just a table that it came out with. So the baseline we had 2,000 trades and a profit factor of 1.5. So to explain profit factor, it's just all of your winners divided by all of your losers. If you win $2,000 on all your trades and you lose $1,000 on all your trades, you have a 2 profit factor, and that's amazing. And it was 1.5 profit factor with nothing. And then as soon as you got to RVOL 5, you go down way less trades, only 700 trades or so for a year, which is just a couple trades a day, 2 trades a day. You can see right here. But you get to a profit factor of 2. So you trade way less and you make way more money. And all you have to do is say, let's ignore everything that doesn't have 5 times normal volume. And it makes perfect sense when you're trading. You want to be trading, if you can stomach it, you want to be trading this stuff like this. The HTCO that has so much insane volume going on, right? So HTCO, we're up to probably like, I don't know, 100 RVOL if you looked at this thing. Because this is a company that no one knew anything about, and all of a sudden it's just ripping. I don't know what the news is on this. I saw a crow talking about it. Let me see. See what's going on with them.
URA doing well here. I just jumped right back in it, guys. I see all those stocks holding in well on the 15 minutes, so I just jumped in. That's OKLO, UEC, LEU, SMR, NNE, and URG. All of them on the VWAPs. All of them looking good. So I'll take the shot with just the charts. Right? I'm essentially running through these names. We'll see what happens.
You gotta get that basket trader on the go, right? If you like uranium, you hit one button and it just spreads your money out into
That's the key, man. That's the key. The one thing though that I'm working on it, Michael. I've been working on it actively right now, and the key here is the lists being made, right? Because a lot of times, at least you when you make these themes, you got to be careful where you're grabbing them from, right? Because some places will have like, let's say like this URA, I think is a great ETF. It's an actual uranium ETF. It doesn't have some random ass holding within itself. So sometimes if you ask it to make theme baskets, it'll try to pull from the thematic ETFs, and that could really throw your things off, right? So you have to do some of the hard work, some of the digging. FinViz has some themes that you can use, but you got to kind of manually pull them also. So I've been working on the basket trader approach, but not for sector and industry, more based on themes, right? So it's not something that it's easy to create either. You have to really create the baskets almost yourself, and then we can make it happen. SMR looking good here. MSOS looking good. Let's go.
XBI here is interesting too. I'm looking for things that they didn't participate when the market did that little drop. They just held super, super strong. And this one appears to be holding up there pretty nicely. So let's keep an eye on that. Retail breaking down, healthcare selling just a little bit here after being really strong all day. And yeah, the SPY just 0.02% down and just still inside this opening, call it 15-minute range. Now, I don't know if Dallas Fed manufacturing is going to care more today than it did normal days, but we have this in 15 minutes. Maybe this is the thing that kind of kicks us off, this Dallas Fed manufacturing.
Just shows more the industrial.
Well, it's just this is what you have to do, and you can't control whether the market's going to actually move, right? Going through here, you can't force this, right? So there's times that you can be like super, oh man, I want to hit all the buttons and I want to trade and really, really push on the gas pedal, and then there's times like this where you just have to look at what's happening and go, okay, the market will be open later today. If we break out after this 1 p.m. Eastern conference, it'll be open tomorrow. right? There will be times where we'll get some craziness happening. It's just not. It just doesn't seem to be right now, right?
Yeah, it doesn't seem to be right now, but we'll see. I mean, it's just a hang in here, and I think that's what you got to look for, the expanded range. What will happen there? There's been insane amount of topping though. SPY really cannot get into the 715 range, so we'll see what happens there. Bitcoin holding on the day. That's looking well on BitX. So if you guys are looking at Bitcoin. And MSOS, can we break 5? I'm looking for it.
There will be a day where MSOS becomes like a 10 bagger.
I think
Just
more.
because so many people have gotten burnt so hard on it that this thing is going to just like
You know
rip.
why?
And then
You know what's my telling sign, Michael? The boomers. Because every time I bring up MSOS to the boomers, they get so pissed off.
Well, it's
That's
sentiment,
usually
right? We talk all
that's
the time,
sentiment. That's how
right?
GE was, and then it all of a sudden ripped through the moon. Well, it's just like in car, right? The shorts, right? Getting squeezed out, and then all of a sudden the trade works, right? That's the type of trade, right, that you need to be thinking about when you're talking these kind of cannabis trades, these kind of counterintuitive trades. But really, I mean, there's some tailwinds now. MSOS, and I always talk about this, Michael. If you're wanting big price movements, you need quick shifts to fundamentals. How do you get quick shifts to fundamentals? Some type of event has to happen. In this case, the rescheduling takes off a tax burden that instantly improves the balance sheets overnight. From one day to another, the balance sheet is completely different and valued different, right? So then what happens? The analysts start quickly trying to adjust ratings, start quickly trying to adjust the outlook on the stocks. Then you get a whole bunch of what? Analyst coverage. Analyst coverage, of course, creates eyes. Eyes create buys. You get how the game works, right? So
Yeah, and that's one of the benefit of analysts being so bad at their jobs is that you get generally an initial move because of whatever event occurs where all the smart people are buying it, and then you get these kind of dumb analysts after the fact where they upgrade. So you'll get throughout the months trickle out, here's an upgrade, here's an upgrade, here's an upgrade, and then you'll notice, and you can chart this, that as the stock trends higher, you get analyst upgrades, and as the stock trends lower, you get analyst downgrades. So it's like fuel for the fire where they just go, okay, it's up, let's go. It's moving up, so I need to raise my target and I need to make it overweight. And then right at the top, you have the most amount of analysts like super hyped about your stock, like Peloton. I remember them upgrading Peloton at like $150 a share. I'm like, you guys are psychos. And now then on the way down with Peloton, they go, oh no. Yeah, it's actually a horrible company. We'll downgrade it now. Now that it's in a downtrend from 150 to like 30, that's when we'll downtrade. So I think that's probably what you see in the cannabis stocks, probably also in the psychedelic stocks. You had the initial kind of move and reaction because of what happened, and then you'll just start to get slowly upgrades after the fact, and that will be your trend that kind of persists higher.
URA holding in here. Now going to look for a takeoff here in URA. Let's look to see if we get that in the stocks also. They're similar to URA, and also looking for pullbacks in CEG. Nice pullback off that 310. Independent power producers are one of my targets for pullbacks. They're getting the pullback day today. Could get some further pullback later by the day, but watching definitely for some pullback in that independent power producer trade, and watching for these names now. UEC, watching for the names in URA. Oklo, to see if that gets higher, right? LEU. Look at that LEU bounce right off the VWAP, right back towards the 221s. That's one that I actually really like. But I said, you know what? The URA has all these. So I'd rather just go for the URA here instead of just going for one setup. And I usually, you know me, I'm not the biggest proponent of ETFs unless I see what? Green light go kind of mentality. When I go into that ETF, all the names I like. If I like all the names, well, I can't grab all the names right now, probably because of buying power issues there, but I can definitely go after the URA and just go after the balance there. The fun part I don't have to worry about the earnings coming into play as we're in earnings season.
Well, yeah, and that's the beauty of that. They have to give you what they're in all the time. Like by law, they have to tell you these are the stocks that we're holding. These are the stocks that are interesting, that are in our. And I think they have to update that daily. Here's all the different stuff that we're in. So yeah, it's a huge kind of sector, or it's a huge benefit that these guys have to give you all the time what they're in. Like they absolutely have to. So yeah, if you're struggling, if you're like, okay, I don't know if I want to pick a psychedelic company or whether I want to do PSIL, well, you just go to their website and you just Google PSIL Holdings or MSOS Holdings, and it will just tell you this is what's in them. And then decide whether you want to go kind of bargain hunting after that. URAA. Of course you're in the double. There's a double leveraged URA. URAA. Any good for swing?
volume.
Yeah, I guess. Just for day trade, I don't know. I don't know what that.
No, I'm good on that, man. That's called trade
it's-
by appointment only.
Yeah.
There was a hangover stock that I hope someone nailed, which was Atom. That was one of my best wins. Sold out of that thing at the open today, but that thing's faded away insane. That's that semiconductor fade off today. How's SOX? Did we get a pullback? No, it didn't even break the VWAP. That tells me more and more that the semiconductors are struggling here. There's no pullback.
Yeah, it's been holding up. But it's interesting, right? IWM is still positive. RSP is still positive. And XLF, XLV, a lot of these places are doing well.
Microsoft comeback. Look at that comeback in Microsoft.
Yeah, there's some algo got smoked there. Just read the news and took a trade right away and goes, oh yeah, but they own this. They own this company. So it doesn't matter that the company's got to go make more money elsewhere.
No, and there's also the added bonus, right? So, of course, profit sharing and then taking off that, opening the door. They still get the stake, right? They still got access to the money. I think you know what you call that. There's a term that's come out. It's called financial engineering. That's someone smart. That's someone quant in the background, figuring out that hey,
they've crunched the numbers.
They crunched the numbers. They said, well, you'll still make the money. If anything, you open the door for us making more money that will pay your bottom line. The only information there that needs to be accepted is that Microsoft is cutting the exclusivity. So OpenAI had to say, hey, we're going to stay with you. We'll be your best friend. We'll give you a pat on the back. We'll always be there for you. You know what I mean? That kind of mentality. And then it's like, open the door to start letting these guys trade. All right, URA looking good here. We'll look to see if we get some lift in those names, watching for those to start taking off there. UKLO, UEC, LEU. Look at that LEU trade already. We'll go to my screen here. We can talk about the trades here. And look at that trade, guys. I talked to you guys. LEU. Right at VWAP, it was right there sitting at the 216 spot, now 223. This one has gas pedal written all over it. Makes me want to add on the URA here, if anything, as we're seeing that continued upside breakout there in this name. And now you look across the board on that ETF. Look at the OKLO trade here up to 72, 73 area. Looks great here, guys. I actually like this. Might take a little bit of an ad here in the URA and just try to ride this trend for today. Let's see if we can get a little bit more here and take a little bit of a shot here. All right, there you go. It just added a little bit there. Now I can risk off the low of the day here. I'm going to risk below the low of the day and let this try to work here now. All right, there you guys have it. Set up the trade there. Now we'll take this type of trade. SMR is another one here that I think can get the lift off. Looking really good on these trades. Uranium names looking really good here. URG, UEC another one that I just got cut earlier, right? Could get right back into this name. We'll see what happens on it. Starts to lift right back towards the 1530s, looking really good there. But now going to look for the continued push, right? So it was a good look there earlier. Could have added on that trade. Did take a small cutout the way the market was looking, but now we're getting that really strong confirmation in these uranium plays. Nice action there. Cleveland Cliff still holding in there. MSOS hanging out here at the 478, looking for the break toward.
All right, looks like I'm back just in time. They got him. They got him. Well, I'll just grab, where's my, there we go. Pop me over here. All right. I had to go dip out for a second, but it looks like I came back just in time. I heard everything like go silent as I came into the room. So, yeah, we're just watching what's going on here in the market, which is now we're drifting back to lows slowly, but we're doing so in diminished volume. And what I like, this shouldn't be important. This Dallas Fed Manufacturing, this is FinViz. They do the same thing as Forex Factory, where yellow, usually no big deal, orange, a little bit of a deal, red, like a super big deal. And we are in that kind of orange, like who cares area with this. But because the market's still in its like opening 15, 30-minute range, maybe this is the thing we care about. Maybe, I don't know. But it seems like we need something to break us out of this range. I can back there. But yeah, so we need something to kick us, and it's either going to be that or it's going to be
Guys, I was there talking to myself for at least 5 minutes there. I don't know what it was.
Oh man,
but,
I hear
guys, I was there breaking down the trade. I'm there looking at my screen. I'm like, Cleveland Cliff above 1050 here, and I look back on the screen. Where'd everybody go?
Well, the
Oh,
yeah, it's like
easy,
I everything went silent when I was out there, so I just booted it back into the office as quick as I could. I'm like, uh-oh, they got him again.
They got him. All right, guys, we'll see what happens here if we can see some continued upside, but I'm seeing more of that nothingness. Financial is the only area that's showing some real strength out there, at least for right now. And healthcare is pulling back here, so maybe opportunities on pullbacks of healthcare. But we'll look to see if we get some type of continued action here. MSOS trying to break into the 480s, can't get going there. And then URA just chopping back and forth. I did add on URA when you were gone, Michael. Started to see those stocks kind of prop there. So tried to hold myself off on actually going for a name and just sticking with the ETF. But these setups just look really good. OKLO, UEC, they're all nice little VWAP, and they're all the same trade. Sometimes when it's the same trade, that gives you real high frequency trading mentality. They're picking up that trade, right? They're seeing that trade, and you can see it in the space. 8% up for UEC, OKLO 3.1, LEU up 8.52%, 5.9 from the open. SMR also up 5.73. Look at SMR breaking back towards the 1250s here. Looks really good here if it can break back above the 1250s SMR and keep climbing high.
See, it's funny. We were just talking about all the upgrade stuff, and then I'm like, what the heck's going on with Oscar today? This thing's just been ripping all day. And then I look down, and yeah, they got upgraded. They don't get upgraded when you're down here. You get upgraded when you're up here. That's how it works. These guys are so slow. Yeah, so this $18 something we gotta watch. Setting up TSLL long. What's going on with Tesla? Yeah, a little bit of undercut. It's starting to kind of coil, like this little
Tesla
bottom, maybe. It'd be good for the market. Maybe that would be the thing that kick us, but the SPY has been frustrating both sides as much as it physically possibly can. Poet, did you see Poet down?
Yeah, it's in the semi
16%,
space.
just
Semi, it's perfect trade to short today, right? You're looking for that trade, right? So it's in the wrong area. Wrong area to be today, at least.
yeah.
Right area to be last
Marvell
week.
canceled all purchase orders, all of them. Like, oof, not ideal. So yeah, I'm really watching these lows in the SPY. Just at some point, we're going to break our opening range. At some point, I don't know when, but so far we haven't done either side. And for the opening range break setup anyway, we haven't taken anything yet because there might not be anything that's doing that 5-hour wall. So this strategy may end up becoming one that's just really earnings dependent, I guess. AMZN.
It's a hot day today. My computer's working extra hard.
I actually got sunburned yesterday.
Yeah,
up here.
man. It's been hot out there, man.
I was out there working, you know.
Getting some work in.
Yeah, well, moss, man. The worst thing we get up here because it's so wet, and the wife just goes, "Yeah, I don't like moss." I'm like, you gotta peel it all off. You gotta lime it. It's all a nightmare. I'm like, I like moss.
Man.
It's green. I don't have to mow it. If I could replace the entire lawn with it, it's like great. Looks green, doesn't grow, perfect. Right?
Oh, isn't that how it goes?
Well, that's why I got like fried. I don't know if you can see, but I got fried up here because I'm just not. I'm not like you. I'm not conditioned for the sun.
No.
We only get it like 3 months a year, so I'm not ready for it.
It's how it is.
So we had the Dallas manufacturing came out, and no one cared.
What we get? So, no one cared.
We were
Bitcoin holding well there.
Negative 0.2, and it's negative 2.3, whatever that is, but that's a number. I was just hoping that could kind of kick us out of the range, but this is the candle that it came out in and sold off a little bit. Now we're bouncing in through here, so
little pullback in the uranium names, but
yeah, bullish Joe on robo lawnmowers. So I want one of those robo bullish. If I could find a company that made them, I'd probably pick some up because I think that's the best. I saw one that was like $3,000, and I'm like, oh, iRobot doesn't exist anymore. There we go. And I'm like, man, $3,000, never have to mow the lawn again. Seems like a good trade to me.
Even $5,000 at that point. I mean, if it was never again.
Quad U. Yeah, I just don't know. I got a huge lawn. I just don't know if it could live that long. Right, it's battery powered.
That's the problem. The batteries.
Yeah.
The lithium. That's why we got to trade lithium names, baby.
Well,
ALB.
I've got like
ALB right now looks great, man. I actually might pick this up right now.
Big front, big back. U is another uranium name that's looking. Just saw it up on I'm shorted in my day trading account, but I just saw that pop up there. MP Materials. And then what? LAC.
Ooh, like that
Lithium
undercut of
America.
190.
Ooh, that's
I got a risk to 189, $3 here. 15. I might take a shot here. I like it. I just need to get in on the bid here. Let's see if I can
look at all the bottoming tails around this.
Like ALB. I love ALB. Yeah. I tried it on Friday. I got cut out. I can try it again. Right? So lithium names,
It's a
baby.
good, good lesson.
SQM.
While the market's not doing anything, we can chat about because the thing that got me when I saw this chart right away is just always look at the direction and location of bottoming tails. It's just SPY alert, but you can see 1, 2, 3, 4 candles in a row that have bottoming tails somewhere between like 190 and 185, you could say. That's how institutions buy stock. They don't just, oh, it's breaking out, I'm going to buy 10 million shares. They pick a zone, right? 190 to 185 in this case, and they say, wait till everything chills out and then start to buy them. And you can create these topping tails or bottoming tails clustered in a short period of time around a certain area, and that can give you some signs. So that's what, when I saw that chart, that's what stood out to me right away is just, and then if you go and you look at the intraday, what you're going to see is, because candles are just kind of fractal information, you're going to see sell downs to 185, 184, and then it pops up at the end of the day, and then it sells in, and then it pops up at the end of the day, and just over and over and over again. You focus on the last couple of days, morning sell off and then buy, and then morning sell off and then buy, and then morning sell off and then buy. And that's, to me, that's how institutions move, right?
Yeah, and this is a nice one. It has the 30-minute opening range set up here, and then starting to push now. So it's an interesting setup there, ALB. I like it. I just need to pull back towards 192. I would love to get 192 so I can risk 187. I'd have to jump up to 193 here if I want it right now. A second. There's a good push there on MSOS. We'll look for that to be kind of one of the drivers of at least my account. We'll see if I can get a push on that.
Yeah, ALB pushing higher again. I'm still not seeing. SPY is reversing here as well, trying to go back negative on the day. So now we're closer to flirting with the high. So this candle right here, ooh, yeah, that's something. So let's go take a look, because that just flipped all of a sudden. Allow me to go to the streets. See what I see here. I'm not seeing anything. Definitely something happened. Because that all happened in 1 minute, did it? Yeah.
Yeah, that quick pullback, I see it. I think
But
it's trying to
again,
reload right here off the 7. What is it? Come on, man. Come on, man. Area that I'm watching is 713.70s on the pullback here. 713s really shouldn't break to 713.50 on the 5-minute pattern now. If it wants to hold a throwback look off the 17 or 713.70s and then a push right back up on the SPY. So throwback look here on the 5-minute and then push right back up. So this is where the dip buys should be showing up. What do we want to see? Big volume start to show up and then a continuation above 715, right? Like go straight to 715. That'll show us that the bulls are back in control. A telling sign can also be like a Microsoft going green. And what are you seeing right now? Microsoft going green. Right? So like, you see these big boys start to lift. Well, guess what? They'll lift the market. Look at Google. Right? So now you can actually really look at your Tesla trade. That Tesla trade that we talked about earlier, I don't know if it was Talk that was looking at it, now looks really great, right? So now you're getting that swift, that quick changing mentality, right? I like this.
Yeah, so that's
ALB.
now 1, 2, 3, and then if you include the pre-market, 4 attempts at this 114.5, just cracking our head against it over and over and over again.
Looks good there.
But if you look, right, so if you count this low, that's one low, and then there's a higher low. So as long as we don't break this low right here, then we're kind of making higher lows against that equal high, and that's an ascending triangle.
one more dip in ALB to get the entry in and take the shot there. Setting up some education here. Education coming up right now in just a second, guys. Stick around. We got a great show for you guys, like always. We do like coal too, like you. SMR is nice. Coal's a little different though. That's going to be more of your oil trade, but that just depends on oil. HCC is kind of the name that I'd look in coal, but overall, coal is up today, so you're getting that bounce in the oil trade. Maybe that's helping some of that continue to bounce there. But definitely steel also up. I'll look for those names to hold on.
Well, and the market holding on with oil up 1.5%, we continue to see that the splitting of it's no longer oil up, market has to be cratering, and oil down, market has to be ripping. They're kind of going their own way a little bit, which happens when the market just gets bored of the same story. The market has a attention span of like a TikToker now, just because it's okay. We got to move on to the next thing. Now it's earnings, so we don't even care about war anymore. Now we need to care about earnings, unless there's some, I'm sure, extreme escalation that would do something. But yeah, that's just what we're seeing now. We can have the market hold on just fine. Now we're reversing off that level. This is hilarious. And so if I could have all the money back that I've lost in this kind of market, when I look back at the end of the day and the market did nothing, and then I look at my P&L and it's way down, I would be retired by now. So that's why I think I keep just hammering it out to you
Story
guys
of life,
that the
man.
market, I could just, because trading's fun. So we want to trade. We want to place trades. We want to do that kind of stuff. And then there's just periods of time like this where the market is doing this exact action, where that tendency gets us into a lot of trouble. It's like, okay, wow, I want to trade. And then plus, if you're trying to do it for a living, you feel the need to place a trade. And in most cases, you're going to get stuff like this that isn't really moving much. Now, if you're trading a car like Crow, Psycho, a nice little breakout there, this thing's not going to really care too much about what the market does. It's just going to hang out.
Yep. Won't care. Getting the education ready, guys. We're going to do a little Mark Minervini coming up.
Oh, the man, the myth, the legend. It's a shame he kind of choked there on that CNBC one time, because that's what like the general world knows him for, and not being one of the greatest that ever did it. And all he had to do was to kind of have the guts just to say, I don't know what this stock does. For those, I don't know if you've got the clip in your education, but for those who don't know, there was a viral clip on CNBC somewhere around the pandemic where the guy, I think it was Upwork, the guy was like, he was talking about Upwork, and he was talking about how he likes the Upwork, how much he likes the stock, and how it looked amazing. And then the anchor on CNBC asked him, well, what does this company do? And he just froze for a while, and then I think he pretended his Zoom broke and he couldn't hear him or something like that, and cut out. And all he had to do was say, I don't know. I don't care. Like he's I think he's won every investing championship he's been in, multi hundred thousands of percent return. And he's one of these growth stock traders. And yeah, just kind of tainted by that. And it's a shame, right? It's just deer in the headlights, got completely frozen. It could happen to anyone. And all he had to do is go, I don't know. It's going up. Chart looks good. I'm a chart trader. Right? Who cares what they do? And the CNBC guy may not have liked that, but all the other traders would go, yeah, fair point. You don't need to know what it does.
No, and I think that, that just goes to show you a lot of times, right? Talk about what you know, and if you don't know it, it's okay to admit that you don't know it, right? It's not about being the expert in every area. Master your lane, master your strategy, master. your education. Let's go to our education today. As we're ready to bring up this video, let's go ahead. Let's get it started today and let's learn a little bit. And as we see a little breakout there in some stocks. Let's go. Let's rock it.
Professional financial sector, an annual return of 10 to 15% is the benchmark of success. A hedge fund manager who reliably hits those numbers will attract billions in institutional capital. Standard financial theory dictates that any performance exceeding that baseline by multiples must involve extreme leverage, high-risk derivatives, or statistically unsustainable luck. This visualization plots a standard 10% market return against the audited performance of independent trader Mark Minervini. Over a 5-year period in the late 1990s, he generated a cumulative return of 33,554%. 2 decades later, he entered the 2021 U.S. Investing Championship and set the all-time record with a 334.8% return in a single year. He achieved these numbers without trading futures, without using options, and by operating a strictly long-only equity portfolio through highly volatile market environments. The mechanical engine driving these returns is a highly structured methodology known as specific entry point analysis, or SEPA. SEPA completely rejects human intuition. It relies on a rigid 5-pillar systematic checklist that acts as an uncompromising filter before a single dollar of capital is deployed. Extreme market returns are the repeatable output of a mathematically precise process. They require absolute confluence between technical momentum and fundamental acceleration. The public market is chaotic. To locate assets primed for explosive moves, a trader must filter out thousands of equities mired in stagnation or decline. The first step of SEPA is ruthless elimination. Capital is only ever deployed into assets already exhibiting massive institutional accumulation, defined as a confirmed Stage 2 macro uptrend. To confirm this environment, Minervini applies the trend template, an 8-point technical checklist that filters out value traps and dead money. Price must trade above the 150-day average, which must sit above the 200-day average. The 200-day average must also trend upward for 1 month. Finally, the asset must trade at least 30% above its 52-week low. Human subjectivity is entirely removed from this assessment. If a stock fails even one of the 8 criteria, it is immediately discarded. The trend template guarantees that your capital only flows into assets where institutional momentum has firmly established the path of least resistance. A pristine technical chart cannot sustain a massive price advance without the fundamental fuel required to attract billion-dollar institutional capital. High growth numbers alone are insufficient. The system mathematically requires sequential acceleration quarter over quarter. The target is a highly specific financial anomaly designated as Code 33. This table illustrates a Code 33 scenario. Earnings and revenue must demonstrate simultaneous, accelerating growth across 3 quarters. The third pillar requires expanding profit margins. When these 3 metrics accelerate simultaneously, it indicates a structural business transformation that managers must buy. These explosive fundamentals are almost always triggered by tangible catalysts, new sector dominance, disruptive products, or massive global demand shocks, like the vaccine catalyst that drove BioNTech's parabolic run in 2021. Code 33 serves as an undeniable institutional homing beacon. It validates the technical trend, proving the enterprise can sustain a multi-month climb. Identifying a fundamentally explosive stock in a macro uptrend dictates what to buy, but executing at the wrong moment leaves a trader exposed to severe drawdowns. To dictate when to buy, the system utilizes the volatility contraction pattern, or VCP, a precise geometric study of supply and demand. Before a stock can launch higher, the overhead supply of weak-handed sellers must be thoroughly exhausted. The VCP maps this exhaustion through progressive consolidations. Tesla's price pattern begins with a 40% correction. Price then pulls back in tighter contractions, 22%, 11%, and 5%. Trading volume drastically shrinks, confirming seller exhaustion. Execution occurs the exact moment price breaks the final pivot point on an aggressive volume spike. By executing precisely at the pivot point, when selling supply drops to 0, the trader captures immediate upside velocity the second institutional demand returns. Even flawless SEPA setups with perfect volatility contraction patterns will routinely fail. Without rigorous defensive architecture, career longevity is impossible. A 10% loss requires an 11% gain to recover, but a 50% loss requires a 100% gain.
I love
To prevent
this stat.
ruin, the system enforces a
You like that one,
non-negotiable
right?
rule. A hard stop loss caps maximum downside at exactly 8% per trade. To insulate against broader market regime shifts, capital is scaled through a protocol called progressive exposure. You never average down into a losing position. You begin with small pilot positions of 3 to 6%. Capital exposure is only increased when the market provides positive feedback in open profits.
This is what I agree
Sustained
with
wealth generation relies
so much.
entirely on forced asymmetry. By capping losses at 8% and forcing the market to earn your capital, you survive the bear markets and maximize leverage during the bull runs.
That's what
The
you want to
SEPA
do.
architecture demands total confluence. A valid trade requires the simultaneous intersection of a stage 2 macro trend, code 33 fundamental acceleration, a precise VCP pivot execution, and highly controlled asymmetric risk. When an asset launches out of a base, the strategy actively locks in the mathematical edge by selling partial positions into rapid strength, securing a minimum 2-to-1 reward-to-risk ratio. Executing this system requires a disciplined psychological framework. Every trade is an independent probability node. It is executed objectively, completely devoid of hope, ego, or the desire to be proven right. The core operational philosophy of the system is simple: protect capital first, grow it second. Engineering market superperformance does not require predicting the future. It requires the relentless, emotionless, and highly disciplined execution of a statistically verified edge.
100% agree with that, guys, and that's what it's all about. And I love the kind of the additions that we have there. If you guys want more, and I know you guys are seeing this, and you're like, "Well, I want more. I want more. Where can I get more information like this? Where can I actually get the inside scoops of that report?" Well, you got to go over to our Discord. If you look on my screen now, you'll see there. And I have my screen shared, right? Let me just make sure. There it is. All right, let's go to my screen here. You guys can see here the blueprint that I made, and I have a full report that you can get into. I'm not even going to give you the sneak peek on that, but you guys can see on my page there. You got PDFs there. We got slides that you can go into, learn more about all this strategy, and I break it down for you guys there in 15 slides so that you guys can have a little bit of a quicker approach. Also, full report that I'm going to be putting out there on the Discord. This is all education that you guys can be getting. Where? You have to be in our Discord. So if you're not in our Discord, sorry, can't get it. See you later. No, keep learning, guys. I'll keep bringing education for you guys.
Well, the beauty of what I loved about that, and have studied what Mark does already, is it is semi-systematic as you can get. His filtering mechanisms, his they mentioned moving averages and what he needs from a fundamental point of view and all of that kind of stuff. That gets filtered down so much. So he is only making a decision on a handful of stocks. And often he talks about all the time is he'll go through his screen at the end of the day that has all this stuff done. He's not out there hunting for what to do next. He has a system, and it goes, here's the stocks that are potentially setting up the way you're looking for tomorrow. And he's like, sometimes there's nothing on the list, and I just leave. It's having the systematic of filtering at the very least is huge, because he's never hunting. He has a system. He sticks to it. He uses technology to make sure that he finds things in the system. And someone's saying he's a drummer, so go drum. If your scan's not,
Go drum, baby.
If the market's doing what the market's doing, which is still,
you might want to go drum also.
You might want to go drum. It's all about saving your capital, and not only your physical capital, but your mental capital. Like I talked about how Mondays are so important. Because imagine if you spent all Monday beating your head against this wall and losing money because the market wasn't doing anything. How crummy you just now feel. You set yourself up in kind of a bad way for the rest of the week. And tomorrow or Wednesday, in particular, when we get all the economic numbers and the earnings, well, if you're down mentally and you're down P&L wise, that best day of the week, you might need to just dig yourself out of a hole, as opposed to spending any time just kind of getting better.
All right, guys. And yeah, Michael gets access to that full report because I put it up on our chat. But you guys got to go to the Discord. So take a look into it, guys. That's 27 pages on that. So it's not like I do these, and it's not repetitive, guys. I work very hard on the back and forth so that it can be a really well done document there for you guys. The people that want to really learn, you'll look at the reports. The people that want it, intermediate, kind of know about it, we'll look at the slides. The people that just want to get some entertainment, hear some financials, they'll watch the video. Determine what level of trader you want to be, right? That's what I'm giving you guys the ability there to not only be entertained, but also be educated if you want to take your skills to the next level.
Yeah, I was actually just, while you're talking, I was reading the PDF. 27 pages. Holy smokes.
Michael, dude. I cover it all, man.
The beauty of stuff like this, right, is you read it yourself and you figure out the things that you want to take from it. And then you pop that into an AI and you say, these 5 things were interesting to me. I want you to build me a scan that just shows me those. You don't have to take it all. You can take some of it and start to go from there. So it's, use AI to help you create it. Use AI to help each individual person transforms it into whatever their own thing is happening. Because I'm not big into the selling into strength. I'm okay with the lower win rate. So you might go in and prompt things a little bit differently, and then find or build a scanner in, our partner TrendSpider could probably do it. TradingView, I know you can use Pine Script scanners now, things like that just shows you those. And if that's a trading style you want to go, then just by hanging out here now, you can at least get started.
Exactly that, guys. We'll see what happens in the market now. I'm starting to see tech start to lead the market in the last 5 minutes. So let's see if tech can start a move back. Where is that going to be important? Semiconductors, right? They're on the lows. They're on the supports. So do we see a drive back for semiconductors today? You can take a look at that with the SMH. We talked about the SMH possibly coming down. We talked about the trade that was against it. Now you have a lot of bottoming, right? The structure is there if the bulls want to come back in and take it. If it fails here, I think we'll have like kind of that fade type of day. And that's okay too, right? Because it just means opportunities for pullbacks. But I think big spot here, if the SMH wants to put it in the bottom, it has the ability to do so now. It doesn't mean it has to happen in a 1 minute candle like I'm looking at right now, but just that mentality now at that bottoming, right? The 30 minutes kind of going sideways there, and you're seeing that bottoming attempt. You're going to see hourly traders start to really kind of take shots off of what prior day's support, right? Where we kind of ripped out of the 500 on Friday, we come right back to it today and try to make 500 the new support.
Yeah, and just for me, my wrap up before we take off here is just noticing the difference still between the Qs and the SPY, and just showing that we are seeing a little bit of rotation into different sectors, which is great. And we just need to see what happens when and if we can get out of this range. So for me, what I'm actually going to do, and you saw me do it earlier, is I'm just going to reset those alerts for the lows and the high of the day. And I'm going to focus on other things when I'm going to build some strategies. I'm going to do something. It's just a great way. If you're going to be sitting at your desk anyway, and you want to do trading work that's not trading, just set an alert at the low of the day, set an alert at the high of the day for the SPY. Go do whatever you're going to do, and then your computer will scream at you if the market moves. And then you can just go back to it and say, okay, yeah, now maybe it's time to pay attention, and just keeps you out of trouble. And then in the meantime, journal, go to the Discord, read those reports, right? If you're looking at this market and it's killing you, well, Mitch is uploading some cool stuff to the Discord. So maybe your time is better spent today
to learn.
Go do that, and then tomorrow if the market starts moving, then at least you're armed with a little more knowledge.
Love it. Love it. And that's what it's all about, guys. Keep developing your trading action there and keep pushing your levels we'll keep kind of riding along with you guys now to get you guys over to the scanner side of things and keep developing. Don't miss our earnings streams. Not today, but tomorrow. Starting tomorrow, we'll have the big earnings. I'll see you guys there. Scanner side.
Yo, what is up, everybody? It is Steve Tileman here with Trade the Pool. It is our lunchtime recap, Monday afternoon here, just at the turn of the hour. We're going to get on into it here. First off, we gotta just touch base and see what SPY's doing intraday here. Whole lot of not so much, but it's looking really constructive to me for a push on higher. So let's talk about what we see. Remember, dark color over on the left side here, this is pre-market action. Pre-market action, then cash session starts on the light side. So pre-market action over the pre-market this morning, a little down, a little up, but a nice range forming. A nice attempt to push much higher. We got the swipe of over 715 in the pre-market. We come down, we just sweep out under the pre-market lows here as well. So interesting kind of setup here. What I'm really looking for is in cash session here to see if we can 1, 2, 3, 4 knock our way through the 714 high of day, 714, let's call it 714.50. So that's the big level I'm looking for. Want to see that transact. I want to see volume through there, and then I want to see a push up and to flip into strength. And I'll draw that out for you right here before we go around the horn. Looking like real nice strength on NVIDIA today as well. We like to see the leaders continue to lead as we break range and push higher. And what's up, Joe? What's up, baby? How you doing, brother? Having a good day? I have taken no trades. I might be looking at a SPY long here. But I am trying this new thing where I take care of myself. So I was at the gym this morning. It felt good. So yeah, let's see if we get a nice setup here into the close, into the midday. Like I said, this pre-market first swing high, along with the cash session highs of the day there, provides a really nice level to play off here. Really nice level there. We are going to keep an eye here, going around the horn. Starting with NVIDIA here, we're going to switch to 5-minute candles as well. Get a little bit of a better view of the day. So NVIDIA, clear strength here. We can see that it just smashed through its pre-market highs, and we want to see the leaders like this continue to push higher, break range, and then we can drag the whole market up with us. Really, really nice action into new all-time highs on NVIDIA here. Going into the daily. Bada bing, bada boom. That's a range break, baby. So now what do we look for here? There's 2 ways that this can play out in my book. I guess there's 3, but there's 2 that I'm looking for. First is going to be pretty typical kind of cup and handle setup here. So that's going to look like a cup, right? So we make this big drawdown. We base for months and months, at least weeks and weeks. We form a nice bottoming structure where it tried to fail. And then that attempt at a breakdown got reverted really hard. We swiped out the highs here. So anybody saying they're bearish on NVIDIA, I'm sorry. Very, very, very unlikely that this is a double top and it ends up at 100 in a couple months. Sorry, just not in the cards in my book here. What is in the cards is a potential pullback, potentially up to 50% of this move. I wouldn't imagine it needs to get all the way back there, but maybe something like this to form the handle to this cup. But this is a very bullish sign for semiconductors, and I just want to show you that on the index here as well. I mean, how bearish are we, guys? Massive range smash through. Ignore that line. But massive range smash through. This was consolidating above the range, and oh, it's somebody at the door. Who's that? Who's in my swamp? What's up, Josh? How you doing, brother? Oh, it's the thing. You know the thing. I can't hear you. So give it the old... You got to do the 1-2 shuffle, and then we'll catch you. Yeah. The old song and dance. We've been here before, Josh.
Yeah, right, exactly. Let me change it, even though I already changed it. But anyway, here we go. Yes, I figured the doorbell would be the more appropriate way. That way you just sneak in here. I like it, though. You know, the person that comes in that's waiting should ring the doorbell if they know how to do it. And then that lets the person talking knowing, well, there's someone that wants to come on and join the live stream.
Josh has stream manners. Josh wasn't raised in a barn. I was a little worried though, because Josh, I have a big old German Shepherd, and he does not like doorbells.
Yeah, I feel that.
So, yeah, I was like, oh goodness, is that going to awake the beast? But no, it seems like he was outside of earshot there. How you doing today?
Good, man. Good Monday overall. You know, always doing good most days of living. You know, you're above ground, living life, taking the breath in, loving life, doing good, man. How about yourself? Have a good weekend?
Let's see. I still got a pulse. Yeah, I'm doing okay. I'm feeling good, Josh. I was a little burnt out last week, so I needed to take some days for myself. I joined a rock climbing gym, so I'm feeling good. And
Nice.
and it's that paradoxical thing where the less time you spend looking at the markets, especially on the weekends, the more psyched I am to look at charts now. So I definitely want to jump on into this here. We've only talked semiconductors and SPY so far, so you haven't missed much. But before we go down the horn, anything you want to spotlight here that I can jump on in now?
Just real quickly, the main thing for small caps, I would say HTCO. HTCO is your main one on watch here. Had a pretty good move today so far. We'll be watching it to hit new highs here, most likely, looking like during our lunch recap today. So HTCO is your main one to keep on watch. So just throwing that out there before we go down the rabbit hole. It's the tickers you want to look at and go into. That's the main one here on watch for some squeezing here during lunch power. What's up, Joe and Snowman? Joe and Snow, and we yes, Power Hour with Steve's a lock.
Yes, sir. So Snowman, it's always Monday through Thursday. We aren't doing the Fridays yet. I'm not sure if we will going forward. Maybe, but who knows? For now, Monday through Thursday, you can always find me in the Power Hour, and then Monday, Wednesday, Friday here at 10 o'clock my time, 1 o'clock market time. We'll be doing these recaps. So yeah, HTCO, this is a powerhouse, man. Look at this, 1278. The initial surge all the way up to 2780 before taking a breather. And Josh, I think you're right. This thing doesn't look done. This thing looks angry. It looks like it wants to keep going.
Yeah, he's like, I want to keep going, man. I need some more. I need some more gym time, brother. I need to lift some more weights. Yeah, I mean, he definitely, or she, either way, wants to keep going. It looks like here. So keep that on watch, especially if we maintain 30. This one has squeeze written on it for sure.
Man, yeah, it's I would say so, Josh. This is a wild one. Whenever I have to zoom back like 4 time frames just to find the last, like any point of reference to the left, that's how I know. So wow, look at this. We got this massive pivot here that I'm seeing 3 months in a row, just hanging out around this point before spiking up and dropping into the underworld there. Well, we are now back above this, and to me, this looks like one big old like bottoming type price action here. Where I mean, hey. In my book, I think we're playing this whole range now of this candle, and you see the 50% just getting punched. I'd love to see the next one up here because that would be achieving 2 targets in my book. So let me get this out of the way. There we go. If we take a look, we have this 38 fib, which I'm too lazy to drag the fibs the other way around, but it's essentially the same as the 6.2 fib. So you have this yellow down here, Josh, and then on the upside, just the level right above the mid equilibrium there. So I would love to see that tag and also sweep this monthly high here at 38.13. So that's my next goal to the upside here, if we can get it.
Definitely. When you see that too, like you're talking about, there's really no chart, and you have to keep zooming out trying to find something. Those usually typically have a better shot to continue to run, or at least run that day, because you just don't have a lot to hold the play down. So the more volume that comes in, the easier it gets for that to pop and go.
Absolutely. So let's see. We're going to watch this one in the bottom right corner here as it tries to push on up through this equilibrium here. You can see it just coiling around that red line. That's a major range equilibrium. That being said, moving on over into the big caps here, the large caps, and what's moving the market. It's been an interesting day here. So we've mentioned that SPY essentially flat from the open, flat from Friday. It's holding the line, but it is not quite ready to push higher. I think it's trying here. I think it's 1, 2, 3, 4 knocking at this 1450 level. So I do believe that we push higher here pretty darn soon. But there is some push and pull because we have some strength in oil that we're going to pull up right now. So I'm going to look at an hourly chart here, and I'm thinking this looks spookily constructive. This does not look weak to me. And I'm seeing some interesting kind of pieces of the puzzle fitting together. So that first part, SPY's strong. SPY's strong. Tech, slightly weaker. So when I did my little stream prep, I have a little thing that, aggregates a bunch of stuff that I do a few minutes before this. So as of 20 minutes ago, it looked like Q's was a little bit about just slightly red compared to SPY slightly green. So treading water, small caps treading water as well. Nothing decisive there. The leaders today, actually, we have oil, USO up 2.3%. It was up 1.8% 20 minutes ago, now pushing even higher. And this is interesting because inside this context of oil strong and tech a little bit weak, we look at the VIX. VIX is getting crushed. So this is really interesting. the market isn't so much nervous as it's saying, hey, energy's not done. So I'm thinking we could see an everything rally as we break the range on SPY out of the top here. And we could see oil equities joining the party, or should I say continuing to join the party and providing that big fuel for the next leg up. Josh, one more kind of piece of this puzzle that I'm putting together in my head here is the strength today in XLF and financials. So when you hear energy strong, usually the first things that come to your head aren't financial strong and VIX weak, right? You're thinking like energy trade, oh, everybody's scared, yada, yada. But XLF is actually performing very well today. So I'm kind of watching. I want to see how all of these daily candles on these indices close, because it's going to kind of give me a feel for this week into this month where there's a lot of conflicting narratives. So that's kind of how I'm framing this week going into it here. Josh, how are you feeling on any of those components or anything that's kind of catching your eye this week?
Well, besides I'll say don't say don't say no, I can't go more to some tech plays like NVDA, Micron, and boy, SNDK. Talked about that yesterday in my weekly preview on stocks reaching all-time highs, and of course NVDA, all three of those right there on my watch list. And holy wow, yeah, SNDK, what a monster. SanDisk continues to climb here, and looking like, again, back over to HTCO, SanDisk, SNDK looking like it wants to pop and continue to climb right here during lunch as well.
Yeah, this one's getting tight for sure. And I love that you're mentioning the strength in SanDisk. My highlight for this weekend in my newsletter was Micron here. It is doing the thing. I believe that it is a breakout on a big old megaphone as I fight with my charts here. So we have weekly on the left. We have the daily in the middle. Then we have the 5-minute on the right there, just showing that strength. This is looking like it's doing all the right things, checking all the right boxes for a megaphone breakout here. We got the really nice hold of the range. This one was mean. This one shook me out here. I got stopped out for break even. I got back in just a little bit, but not nearly enough. So I'm like, do I add here? I would like just a small retest of 500 this week to get some more size on the board there. But besides that, I'm fine with just holding this piece until it keeps on running to where I think it's heading, which is, I think we're going to see 1,000 on Micron too. I'm not going to lie.
Oh yeah,
Yeah.
Well, no, I mean, again, like we kind of talked about last week with the whole, car, how high can it go? And then of course bringing up HKDs of the world. So nothing's really going to surprise me anymore. And just seeing those power runs over the last few years from these certain tickers and where they gravitate, like you're talking about magnet, gravitate, what term you want to use toward certain targets and prices. And yeah, that seems to be, once you get this crazy massive move like we have over the past year from these tickers, they get to 500. Once they get to 500, they like to really start to soak up $100 at a time. You really just saw that most recently from cars. It went from 5 to almost 900 in a matter of, it seemed like a day or two. So if it continues on the path that I would imagine it does, I think this would be more of a slower path than some of those SanDisk car, obviously, type of plays. I think it gets there, but a little bit slower of a pace. But that helps you as a day / and/or swing trader, where you don't feel like you're missing the boat. You're going to get chances to get back on the boat. May not be the boat you want to get on because original boat's left, but at least they're sending, that cruise is already out in the water, so they're going to at least send some boats back to you to get on the cruise, so to speak, right? So
no, I love that. So Josh, the reason why I chose Micron over SanDisk, which definitely it seems like it's got that juice that you're talking about, that really explosive, but like you're saying, it's too extended for me to feel really safe, like in a position trade. Like, yeah, I can day trade it, but like the meat and potatoes of my system are these position trades where you can really just lock in. So for me, this is actually one of the least extended in the semiconductor spaces. And I'll throw 2 more on the radar too for y'all that I think are really good position trades going forward. LRCX, very promising here. If it'll load, come on, baby. There it goes. So a little bit of a head bonk today. So I want to see what it does into this, the 21 moving average here. What I would like to see is this being a little megaphone on top of this other megaphone here. So see how it's kind of like nestled. It's got like this expanding pattern that's consolidating now near at the top into another expanding pattern. So I'd really like to see this one catch right off this bad boy here, retest a new high, and then just start to cook. So LRCX, this is on my list, as well as AMAT, Applied Materials. This one, very similar chart, right? And these ones, I know they look just screaming up to the right, but these are actually some of the least extended in the semiconductor space that fit the criteria of what I'm looking for constructive price action for a swing. So I wanted to put these on people's radars there. And
those are pretty charts right there.
Yeah, they're not too shabby, right? Catching up on comments here. What's up, Michael in the house?
Mr. D Rider, Mr. T, how we doing?
How we doing, guys? Yeah, so AMAT, very similar chart. It's kind of holding this 9 here. We could see a strong catch intraday, but so far not seeing it. Maybe we could look for a higher low on AMAT today off this 400. That's definitely a possibility. I like the round number. That would be respecting the previous all-time high. Yeah, that'd be 395. So maybe it needs to go a little bit further. But this is definitely on my watch list for just tagging into these really strong sectors, which as of this point, they're kind of it's been hard to get into these lockout rallies in semiconductors. I'm not gonna lie. So I know people want in, right? So these are the only areas that I think are really showing potential.
Yeah. Well, and look at and the thing about this too, I mean, is we've had that semiconductor rally from, like, again, I hate to go back to it, beat a dead horse, but NVDA a couple years back and its crazy run to SMCI tagging along like a little Playco fish on the whale or the shark going with it. Now up to this year and what we're seeing, we're going to get more of this, whether it's this sector and we get new stocks and companies that get the move that haven't gotten it yet, like you're talking about the AMATs or whatever of the world, or there ends up being a new trend over the next 3 or 4 or 5 years. And so now we can just see how volatile when we get into these heavy trends, how long they last. 23 into 24 is when NVDA, AMD, SMCIs of the world really kind of got off their butt and started going. And now we're seeing more into still this year. So ample opportunity down the line. So even if you're missing some now, know that the next wave, the next trend comes into the stock market, like these, whatever we're trading, of course, now semiconductors, whatever the next wave and trend is, know it lasts X amount of time, and then B, how much these stocks move. So long as you can get in early, know that now what happens, boy, you see a play go from 50 to 100 in a hurry, and we get to 150, 200. You might want to start looking at getting in, because next thing you know, we're at 500, and a lot of the times we're at 1,000. And so, find your wave, whatever it might be. The next one, right now, we're still in that semiconductor wave. Of course, how relevant they are in the world and how much they tie to everyday life and what we're doing and using. There will be something else down the line that comes into play that we will have to use every single day. Know that what we're seeing now, hey, that's what I go, like, cool, man, if I'm seeing what a Micron, SanDisk, all these other companies have done, I know that A, another one could come down the line and do the same thing, and B, once we move, like I said, into another sector, another trend, whatever it might be, we know where they go now. When they get that lift off from the single digits, I'll call single digits, maybe tens, but below 100, so we'll go double digits to triple digits. We know what happens. We go to 100 and 200. Next thing you know, we get to 250, and then we're at 500. And so just see what we're seeing now, and it'll be the same thing and reciprocal 5, 10, 15, 20 years from now, just different stuff. And then I can't imagine if we're this volatile now. I mean, we're going to be those old guys going, I remember when getting to 500 or 1,000 was a lot, sonny. And we're seeing plays go to, like, they're letting plays maybe go to 5,000 or 10,000 before they split them for whatever reason. I don't know. We'll see. Right. But, maybe they pull Bitcoin out on us here, and, and they let things run a little bit more before they price split them. I don't know. We'll see. But yeah, just know that we're going to get more of it. And by the way, more of what we talked about, HTCO hitting new high of day, running now up almost to $37 here. Beautiful squeeze pattern. That's what I was saying. This is on high watch here.
Yeah. This is one where I was considering just taking it off this 50 fib, but I just don't like it. I know that it usually is not a bad idea if you're framing the trade correctly, like I think we did here, but it's just always as hard for me to take the leap of faith on velocity through a mid-range, especially when it's a stock that in small caps, I still don't feel like I have it really dialed in what constitutes a high volume break, right? Just because it can look so much more jagged and explosive on one of these and still end up rejecting, with that violent spike up than it can on a mega cap that I'm much more comfortable having all that.
Yeah, and that's the thing that, especially I'm sure like Nas throughout the years can't really run a lot of AI stuff on this because it's the average volume. It's just, it's so inconsistent. You just don't know. And so it's hard to, like, people, I've had that, so funny you said, I've had that so often throughout the year, Steve. Josh, what's good volume? Well, I'm like, well, I mean, depends on what you're looking for. I'm like, a play can have 4.5 million shares traded for the day, but you could have banked on it. 4.5 million shares could have went from 5 to 50 back to 5, because of halts, yada, yada, yada. Or, and then or you'll have plays that run all day long and have 500 million, 700 million shares of volume that have moved from maybe $1 up to 150 back down to 70 cents, and you're like, okay, well, that's had 700 million shares traded, but it's went from like the range today is that's the range, really? Then you'll have shares that maybe, or you have like 100 or 50 to 100 million shares traded, and it's moved from 5 to 70 to back to 50, and it's just, it's been moving all day long, and it never really halted. It just was heavy volume and just had the momentum and the mob, as I call it. And so it's always hard to justify what's good volume, and I think that comes with the more small caps you start looking at and understanding. Like I was saying earlier, and I was trying to trade HCTOs. It's halting. Of course, me and my gaps, yada, yada. I love my halt strategy. Love trading these type of tickers where most probably shy away and move away from HTCOs, but I've learned how to trade them throughout the years and know where to get in and when to get in. But again, look at the volume on it today. It's not like it's really crazy good volume. Is there some? Yeah, for sure. But it's going to be different compared. Again, you can go to a play that has, let's just do this for a great example. So today, right now, HCTO has 9 million shares traded. It has gone from a gap up of around $11 up to $37. Then you look at a play like let me see here real quick so I can see this on a bigger chart. WAAS. I've been calling it YAS all day. Not WY. YAAS. YAAS. YAS. YAS.
All right.
YAS.
I like it.
Yep. Its volume today is 130 million. So it's got 120 million more shares traded, and look at the movement. Not a lot. Now, is there some? Sure. Yes, true. But do you see how if you try to do studies on volume, it's going to be hard to understand what's good volume, what's not. How would you use that? And like you said, volume profile breaks. To me, that's where then charting comes into play more so than anything with small caps. Put your lines in and trade them. Find your support, your resistance areas. Use a couple of moving averages in your VWAP, and I promise you'll find, like that right there. Boom, boom. That's it. And then now if you break above those areas, right, now you can come back down off of them, and that's where I get my bounce plays, right? And then you'll see if you use the volume profile as you like to do. I've looked at them enough to know where they're at in those areas, so I don't usually leave it on my chart anymore. But yeah, just a lot of the time trying to identify what is volume and how do you use it when it comes to small caps. I don't think there's a real good edge because it's always going to be different between what you're trading.
Right. It can never be like a set number. I think it's so important to just always watch that relationship. This was like a big level up in my trading where it was like everybody said, look for volume. It's like, okay, yeah, but it's about what the volume does, So what I look for is volume and results. So I think of it as like the effort and the result. So the effort is that volume, just pushing. And if it's all of that volume, you see the tape just flooding with buys, but this passive seller is still holding the line. Well, that might be telling us something. That's a lot of effort into a brick wall, So something has to change. Is that brick wall going to come down? Well, then maybe we can look at stuff like the level 2s or Bookmap, something like that to help gauge that. But that's like fortune telling to some extent, until we actually see the result of that volume.
You don't want to, come on, you got the crystal ball over there. You got the crystal ball. You got the touch. Yeah. And I think what Taquito says is true. It's volume's going to be heavier at lower areas, right? Yeah, SPY just got a huge spike, then right back on down to where it came from. But like say your $1, sub $1, $2, $3 stocks are going to have more volume than say a $7, $9, $10 stocks most times, right? And then they're going to have more volume than a play like today that you see a stock go from 10 to 30 because there's halts in there, and then they're probably lower float, right? Because then that's when float really becomes a key, right? That we did actually just didn't talk about. So less float, less volume. You need to move it. So if you have a low float play and you have a lot of volume, like say 50 million, 100 million shares traded that day, oh boy, yeah, you're going to have some movement. You have a stock that's 70 mil, 50 mil, 100 million in float and has 100 million shares traded. Well, less movement. So that's this thing too. Like I think TAC and other traders have talked about when they do the call-in show or my dual stream Friday, or that's the one thing about small caps is you're always having to find the new ticker, right? It's always going to be something new. You got to worry about all these, where large caps, you don't have to worry about the float. When have you ever looked at a float on any of the large cap plays you look at, right? Never, right? You never. Never. It's nice. That has nothing to do. Right, yeah. So in small caps, that's huge in the rotation. And so, that's what makes small caps like even Mind Music Muscle says, small caps scare me. I get it. I mean, I love them. I love it. You know, it's just, it's my thing.
Sorry.
It's my dream.
Sorry
You're
to
good.
interrupt
Yeah.
here. We found the news. So Levitt said Trump discussed Iran's proposal with the team today. Levitt says would not say U.S. is considering Iran's proposal. She says we'll hear from Trump soon about Iran. So I guess market is front running a little bit. This seems like so we're going to get something pretty soon here. Market likes it. We finally got the push we needed. We just kept wicking back into this, like we were talking about, those high volume profile areas, and especially this most high volume here, this big old, the big old chunk. And what we did is we wicked back into there twice, could not find any continuation to the sell through this uptrend line, and we just squeezed on that news here. So now we are through this big resistance, and I'm seeing around the horn follow through on a good amount of things that I'm watching. And I think this is a good time to talk about LAC and lithium, because this is a trade that I'm in today, as of today, and I think it still is very, very valid, even though we're just starting to break highs of the day here. So Josh, are you a lithium man? Do you like lithium?
Yeah. I mean, that's a great station on Sirius XM.
I was going to say, that's what I thought of too, actually. Let's see.
Oh, so that's awesome. We always have to bring up us, me and you. Of course, we always, which I love that we have that, like, grew up close to the same era, but yeah, we love music, love video games, love music. So had to get something, some kind of music or video game or movie, analogy today. So there you go. Lithium. A great album too. It is a good album too. Yeah, lithium. Anyway, but yes, I like it. Is it something, again, these things that I want to invest into long term? Sure. Do I do it? Am I anything long term other than these tech companies? No.
Right.
So it's something that you want to.
I'm going to try to get to you, Josh, over the course of our shows together. I'm just going to try to be that devil on your shoulder. Just, you sure you don't want a little commodities? Sure you don't want a little exposure to something real? Something that you can hold in your hands.
Hold, touch. Yeah, exactly. Yeah, exactly. Hey, and we can. So come to Arkansas. We have the only diamond mining, whatever excavation in the United States. I think in North America, if I'm not mistaken. But Murfreesboro, Arkansas, you can go mine for diamonds, and you can look it up. It's called. I forgot what it's even called, but it's in Murfreesboro, Arkansas. You can mine for diamonds again. That's why if you look at our flag, the state flag, we have like a diamond, like it kind of, and with the stars around it, because we're the 25th state, so there's 25 stars in it, but there's a diamond in it. And yes, my friend, you can go, and people have found 2-3 carat diamonds at this place. So I love it, my man. So yes, I would love to hold something real, or invest into something that's not a fake company that I have no idea what they do at all. Like all these small cap companies.
It is a very different lane of investing, just engaging with the market in general. It's like, I know exactly what these guys do. I know what they got. I know the market doesn't respect them, and I know it's a long-term play, but I know one of these days they will get the respect they deserve. They are sitting on, I think, the biggest lithium mine or lithium deposit in, I want to say, the whole hemisphere or something. I don't even know. But it's been 6 months since the last time this looked good technically that I actually did my homework on it. But now I'm going to have to again because it's really, really setting up. Just a few things I want to mention on the technicals. We have the big downtrend line break. We have this nice flag over key moving averages, which are starting to curl on and upwards here. I see a little inverted head and shoulders action. I also just see a nice respect and reclaim of this bottoming zone here. That's what I see on the daily. On the weekly, looking even nicer. Just a big old flag pennant trying to break through the previous kind of base here. You can see our price history starts right at this area of interest, where it kind of bifurcates us into a bottom range, and then this kind of, if we get over here, we squeeze, but then we get squeezed back here. I think eventually this consolidation is going to lead to range expansion through the $10 handle, getting us to some of these long-term monthly targets. So LAC, it's kind of the low quality one, but there's a really nice high quality one that I want to put on people's radars too. This is the one I'm in shares of as more of an aggressive position trade. So I'm managing it more closely. Oh yeah, beautiful action here. So LAR, this is going to be another lithium company, just beautiful charts. And when I see this on the whole sector, it's just telling me it's time to get involved in these. So,
how many W's I've seen in chart, either W's or inverse? Well, it's a W, but how many inverse head and shoulders or W's we're seeing here recently?
Yeah,
it's nuts, my man. Yeah. The Bulls are killing and kicking some Bears ass right now. 100%. It is what it is, and we're going to have that. Of course, we're close to all-time highs. We were wondering how long the Bears would win. Bulls 100% taking over a lot of these charts.
Absolutely, absolutely.
Real quickly, it's called Crater of Diamonds. I had to make sure I knew. I was like, oh yeah, it's called Crater of Diamonds. And you look at it, bro. It's just a field. It's just a grass and dirt field, and it's really cool to me. But you wouldn't think much of it. You're like, what does it look like? Literally, I've never been there. A lot of schools went there for like field trips back in the day. I wish ours would have. That'd have been cool. So at least I could say I've been. Now as an adult, you kind of feel like, man, I should do that. I'm an Arkansan, but now I'm an adult. Like, do I really want to go? You know? Like, wish I would have went as a kid. But yes, and you keep what you find. So whatever you find, you keep, which is really darn cool. So I was like, I had to look that up and throw that out there real quickly. But yeah, we are bullish. Lots of W's, lots of inverse head and shoulders here recently. And yeah, LAC here with that move on up there, continuing like it. Yeah, SPY looking like she went 715s, almost close there. Yeah, love it, my man. Give us our set. Hey, we've been calling it 720s. We need. Well, I want my 780, but give us 720s to start with. That's what we've been wanting for a while.
Yes, sir. Yes, sir. One more alert that I just noticed. One of my good friends, great trader, just mentioned that there's a lot of interesting flow on Joby into the earnings on Wednesday. Seeing it kind of double bottom on the day too here. So if there is potential for this one, the flow is on very risky 9.5C weeklies. So it's trading at 8.5 now. That's a gamble, but something to consider that it is at the bottom of a pretty big range here into earnings and could be seeing a bottoming process or could be seeing a bear flag. We still got to decide, but I am liking that it is up off the mat just a little bit today, and I think that it's going to try to close up into the $8.75 to $9 range over these moving averages. If so, sets up a nice little look into the earnings. So those are the top watches for me today here. SMH, ooh, nice move off the bottom, and this one looks like this is cooling off from the morning and now ready to kind of keep the rally going.
7:15 on the dot. Now we're rolling a little over it. Boy, she is moving. She's moving. Love it. Love it.
What else were we watching here? YAS, but then HTCO?
HTCO is still up above 30. Like I said, as long as she holds 30, 28-ish area, that's going to be the main key for me, and she can continue. Not that she can't still pop later, but if we want to see nice new highs here and really strong continuation into power hour, that's what I'd like to see, hold 30 into 28, even a retracement there for a dip buy. And I'm just watching just because I know, again, the all-time high movers. Google not quite there, but getting close. Looking like it wants, and it is, hitting new high of day. NVDA as well, and SNDK. So those are like the three big boo-boos that I'm watching. Other than the SPY take on off here, we have some other takeoffs here. So we're but small caps generally had that. We've had this. What we have a lot over the last few weeks for small caps. We have a very busy pre-market with a lot of different tickers moving, and then it ends up being really slow. And we'll have maybe one mover, and it ends up being like an HTCO where it's going. It's the spread's big. It's more parabolic. We haven't had like a pre-market runner take off and hold the mob. Not one that I can remember over the past couple of weeks. It's whatever we're looking at the bell. I promise you, by lunch and the recaps, we're not anymore. It's something new, and it's something that most likely has popped up out of nowhere.
Oh, absolutely. I'm with you there. I just wanted to pop to your top watches here. So NVIDIA, absolutely powerhouse in here. I think it wants the 215, and I think that it's going to hit the 220 this week, probably. So those are the kind of two levels. I'm just going by the round number strikes for now until I have something really dialed in. But as we're reaching into blue skies here, I would not be betting against these names. Another one, very similar look. This is my biggest position in semiconductors. ARM, big ol' ARM, pulling back some today.
Yeah.
I think this is probably it's overextended. I'm not saying buy this, but I bet it does end up working out just fine. I was seeing some 250s on the chain, which is crazy for the weekly contracts. 250 would be pretty egregious, but this thing's in breakout mode. It just broke the range. Now this is the first red day. I would like to buy it off this 9 moving average as it comes up. I got a decent size, so I'd like to get a little bit more because I'm a greedy boy. But ARM's been an absolute cooker. Can't be mad about one red day.
Yeah, and yeah, especially after how you exploded from, that 145 mark or whatever. Well, yeah, I think it was like right around, that was what, Monday before last when we first exploded, but somewhere, what was the breakout point? Somewhere in that one low 30s when we kind of completed that U shape and really started to push up. And then, since then it's just been on green mode. So you gotta, especially like you said, overextended, breaking all-time high last week on that barn burner Wednesday all the way up through end of Sunday's movement. You're talking 180 all the way up to 245. That's some big movement for any company, let alone ARM, obviously, and what it typically does, which usually is maybe a 5, maybe a 10-point mover of a day. Now all of a sudden you're moving this big, right? Which happens when you kind of get to new levels and all-time highs. I think I had my ultimate low of the week probably somewhere right around, I forgot I did this yesterday, probably somewhere right around 200 back into the highs from last Wednesday, which is 197.50 area. So I anticipate pullbacks on these plays. You're going to get them, and sometimes they can look more violent. Well, again, you've gone as big as you have. You're now going to have some bigger days, so just take that into consideration when trading ARM. If you are day trading it, which I like that, I'm more of a give me 3-4 points in a move versus it's moved 3-4 points in a day. So I'm typically looking for 2 to 3-4 points minimum when I trade large cap tickers. So I want this. This is exactly what I want in ARM. I love it. Absolutely so. And I feel this, like you said, 300, you said summer may come even before summer. The way the rate that it's moving now. I mean, if you think about that, because I think I brought that up yesterday. We're again yesterday moving into Sunday. I always give those weekly levels and weekly previews about 2 to 3 hours before the movement starts on Sunday. I always do it Sunday afternoon, Sunday evening. I release that and I said, hey, watch for a pop to all-time highs here, whether it's later today or it's Monday. And sure enough, there it goes. So, and you got to think 245. We're only $55 points, whatever you want to call it, away from 300. Well, we were again yesterday, but so it's. Yeah, you're already tipping on the iceberg at that point, in my opinion, for sure.
No, I love it. And what I would really like to see is just a retrace. Just give me 50% of the retrace of this crazy surge, not the whole from the bottom. We don't need to do all of that. I don't think it's going to get back down to 170s or something. But what I do see potential for is just cooling off from this exponential move and then just starting to kind of consolidate in this maybe 195 to 210 kind of area. As we just like we did here, where we broke the range at the end of March there, and then we just kind of consolidated there. We broke the range. Let's do some more consolidation, and then that should hopefully give us another entry like we got here off the 159 right on one of these days here, and that was a really nice. Just keep it simple, right? We got the big move to show us that this is a great stock. It came and held the moving averages exactly like it should, if it is doing the thing where it explodes like this. So it gave us a lot of confidence that when it broke the range and kept tight here, that it was acting right, because it's breaking out of this pattern and it's not spiking and rejecting. That's what you don't want to see. Like this one, it had no volume here and then it just waffled down. Here though, it's holding near the top very, very constructively, and these moving averages are curling up much more aggressively than here, where it's kind of limping up. Here we're expanding. So that's what I'd like to kind of see for the continuation leg. Really nice look there.
Yeah, like you said, do the thing. I mean, even like my one-on-one earlier that I did earlier today. How often I've said to here recently, I always goofily said I came up with this analogy and theory, whatever, in the last year or two, where Jerry Maguire, show me the money, show me the money. I know you probably have seen that before hundreds of times. Well, if you want that, then I said I want to get a T-shirt that on the front side of it says, show me the chart, and on the back side or whatever, vice versa. But show me the chart, right? Show me the chart. Build the chart. Let the traders, let the stock market, let everything else, let this chart evolve, right? Let it do the dang thing, or do the thing like you're saying. If it does the thing, then now you can go trade. If it doesn't do the thing, then I don't want to trade it. I want you to do what I want you to do. If you don't do what I want you to do, then I'm not going to trade it. And that's a huge thing for traders early on. So I wish traders would understand that and just sit back to wait and see if it does the darn thing. And if it does the thing, then go trade the thing.
I love that. Yeah, and because it's so hard to not just kind of put your own judgments and your own feelings onto it. It's so much easier to just kind of not resign, but just like it's almost like it's like a leap of faith in a sense of like, hey, I know that if I just trust the system, any one time might not work, but overall, I know that math is on my side, and it's just freeing in a sense of like, you don't have to be right. You just have to be disciplined. It's so much easier to be disciplined than right, because anything could happen. It's so much easier saying, hey, if I do this 100 times, I'll make money for sure, than saying, hey, on this exact play right here, right now, this is going to happen. That being said, sometimes you get those, and DRAM here is a good example. This thing just didn't ever have a red day, just about, you know, it just keeps on grinding because we know that fundamentally everything in this ETF is going up. So I'm up about 20%. I think you're probably up a little more. I think you probably got in a few days earlier, but it seems like the comfiest hold ever. I'm just chilling, not really touching it.
The comfiest hold ever. Yeah, I didn't even look at this play when it first came out. Of course, earlier, you know, almost a month ago now. But yeah, it's forgot all about it. And then yeah, by the time wherever I saw it first being mentioned, it was already up, you know, like 10, 12, 15 points or whatever. It was in the 30s. And I was just like, oh, well, I don't want to get into it now. I mean, I should have, you know, probably IPO'd it, or, you know, there were times to get in for sure. So good for you and you guys on DRAM, especially when I just look at the technicals here and just looking at my deviation channel. Like, it's funny how it like is riding right up with it like perfectly.
It's like as hot as it can go without getting overbought to the point where it's unsustainable, right?
Yeah,
that's how I kind of view it. And then it probably is going to end up getting too hot anyway here soon, and then it will need to come back down off those standard deviations. That's usually how these kind of go, in my book, at least.
Good stuff. Hold on, is this the Nick Diaz that used to fight? He had a brother named Nate Diaz. Now we got Nick Diaz in chat. What's up, Nick Diaz? He's like, I'm getting the stock trading game. Done taking shots at the dome. I am taking it on to the stock trading world.
Josh, you ever do any MMA?
I've actually wanted to, but no, I've never done it. What I'd want to do if I ever got into that would be two things I'd want to do, and I still would love to, just because it's just the getting any stress you do have out, possibly out, but then secondly, how good of shape it keeps you in, you know. But two things I'd want to do: I'd want to learn how to strike, right? I'd want to learn to get striking down, whether it was mostly with arms, but then feet too. You want to get feet involved, especially those kicks to the thighs or to the shin, or you know, those can weigh on a lot of opponents, especially just if you're quick enough to the body, you know, like, you know, you love to see those. There's a longer, it's a faster way to get to the body and get body shots in than having to get in there with your arms or hands. And then I would want to do that. So learn how to strike. And then I'd want to take like jujitsu. I'd want to take a lot of groundwork stuff. Nice. Because I really feel like I'd be a good striker. Like, I just know that. Like, I'm a bigger person. I'm intimidating when I get pissed off. Like, and most would say, like, yeah, like, I'm very happy. Obviously, I'm like, wow, Josh, you get mad. And that's like that. And it is that tail of the tape of, you don't want to make really happy people mad, because you got to think they're never mad. So when they get mad, it's really mad. Like, it's steaming, you know, it's nasty mad. And so I'd have that. And like, when I get hit, I've always had this too. Like, and here's a weird thing in football. I hate hitting. You know, in football, if you played in grade school, they always gave you two positions, one defensive, one offensive, and you usually would play one way, whichever you're better at. But they'd always kind of, anyway. So I played safety, and I hated hitting. I loved covering and trying to intercept balls, but because I was a wide receiver, right? That was the other position I played, or quarterback. But I when I would get hit, I loved to avoid hits. But when I'd get hit, I'm like, oh, like they'd get me good. But I'd get up, I'm like, oh, you got me? I'm like, okay, cool. Like, I want to make them miss the next time. So, like, when people hit me in real life, like anyone, for whatever reason, it wakes me up. So, point being, I think I'd be a good striker and I would be good there. But, boy, you got to know if you do that, you got to get some grounding game on. Because if someone does take you down, you got to learn how to get out of arm bar, all this arm stuff, and whatever, all the different technical. I don't know all the verbiage. I'll watch it decently enough, but don't know, like, the verbiage to all the different holds and this, that, or the other. But yes, those would be the two things I'd want to do, and I'd love to do that. I'd love to get to sometime in the near future, before I get too old, learn striking, and then learn some ground stuff, and then then try to maybe get in a couple of fights or those competitions that they do locally for amateurs. But sorry for the long spiel of, you asked if I've ever done it. I could have been like, no, but.
No, I don't want the short version. I want the long version. Because no, that's awesome, man. I did jiu-jitsu for a while. I was trying to get filled on DRAM here. It looked pretty good. It was playing with my entry. It didn't actually fill. So maybe I'll chase it one tick here, and we'll see if it comes back to the 200-minute moving average. I wanted it off the 9 there. We will see if that gets filled. But no, yeah, I think it's actually very similar to trading in a lot of ways, because it inherently builds, or at least tests, your discipline, and there's no way around having to contend with certain aspects of your personality which might be hindering you. So I think there's a lot of transference there. Also, it's especially with groundwork stuff like jiu-jitsu. I did a couple of years of jiu-jitsu, and it was very much like problem solving, and like is like a physical puzzle, you know. And so it's a little less physical on the trading side, but it still is that mental puzzle that's very like it can be physically distressing, you know. Like I'll sweat,
sure.
I'll be sweating when I'm trading sometimes in a tough position. Like, oh my goodness, am I working out right now? What's going on?
Yeah, right. Yeah. I feel it. Yeah. I feel it. Feel it. What's up, though? Joe in chat still, too. Royce, Gracie, badass. I did so much. I love it. Tac says he said a train in Brazil. Back tells him every day. I am too nice. And then again, really, because I don't have too long of what to. So if I had to choose one of the other, here's my point. I have such a passion for driving and racing. That's what, if I had time, that's because I went to high school with a girl that were anyway. She, and what's funny, I always talk about, there was someone that wanted to get me into gold. She wanted to get me into gold because her husband, and they do, I forgot what his company does. And this was back in 2017, 2018, and getting everyone in gold. And I forgot what exactly his company does. But anyway, and they were well off, right? Well, they live in Texas, in Austin especially. But point being, I don't know the husband. I just follow him. We're fringe-ish, right? I'm obviously friends with Shelby, who the girl I went to high school with. And so he now has joined some, like, he learned how to drive, and I forgot what like circuit he has joined, but now he's won it 3 years in a row. And so I'm like, and he's about my age, and I'm like, oh my God, I want to do this so bad. And so if I had to choose between the two, yeah, you know where I would go. I want to get into a car, and I want to go fast, and I want to beat everybody. And that's my go-to. Nick Diaz says, "What's up, Josh? Came to show support from my man, from the guys, and of course, Master Sensei. And yeah, dude, anyone fighting a wrestler who doesn't have a ground game is done." Yes, exactly. Yeah, for sure. Yep, I've seen that before. Now, I'm more of a boxing fan, so I do like the MMA fights that are more standing up. I'm not a ground type. Those let's just be honest, those fights can get boring. Mayweather fights can be boring. So there are boxing matches where they are standing the whole time because they're not throwing punches and they're dodging the whole time and they're running. Although Mayweather at times, I will give Mayweather.
Mike Tyson, pretty boring.
Yeah, right.
But I hear you.
Yes, but yes, you get two heavyweights in there in their prime, like boxing, or two good middleweights. Same thing for MMA. I just can't stay on the ground game, and they're down there holding them in a position for 30 seconds, and it's the same. I'm like, 40 seconds later, still haven't really moved much, guys. Come on, and it's just like I can't. But it is what it is, and every sport's going to have their, we're going to have football games where we would love a good 34-31 last second field goal, man back and forth game, but we're going to have some that are 7 to or 10 to, or just low scoring. We're going to have some baseball games. It's nothing. It's a pitcher's duel. Ends up being 2-1, 1-0, right? And then you're going to have games when it's 12-9. And so same with basketball. You're going to have games when they can't make a bucket, and it's, well, not in the NBA anymore because these guys don't even play defense, but they can make anything anyway. But you get my point. And so you're going to have that in certain fights. You're going to be crazy. Oh my gosh, they just threw 1,000. Like in some boxing matches, they'll throw 1,000 punches, and you're just going like, they threw 1,000 punches, and then you'll have some where they throw like 150.
Yeah, big variance there for sure. I'm waiting. I almost got filled on my DRAM on the wick back into that 9 moving average. It did not trigger. I'm going to go one tick higher, and this is the last tick I'm going. Just get me in, coach. Get me in.
Get me in, coach.
Oh, wait, no. Did I fill? No, working orders. Okay. I was like, what in tarnation? There we go. All right. We're in.
What in tarnation? Boy, it takes me back. What was the character on Looney Tunes that said "what in tarnation"? What was that guy's name?
Gotta be Yosemite Sam, right?
Yeah, it probably makes sense. Yeah, that's gotta be. Yeah, there we go. Yosemite Sam.
So a good friend makes a ton of memes that tend to involve small kittens saying the darndest things. One of which tends to be "what in tarnation." So that's just worked itself into my lexicon. Just
hey, that'll happen. These words that you never really said too much back in the day, now all of a sudden work their way into your vocabulary, and you're like, where and when did that? By the way, NVDA, there's our 215. We talked about squeezing and going for more, just like SPY in that 715. Probably goes a hair over it and sees a little bit of a reversal and pullback. Again, just nice, good moves to all-time highs. We go.
I like it. I'm liking the flagging on Joby here too. We got the nice kind of stage 2 base. HTCO, by the way, does not look done. I should have look at that level test on the 31, the back test of the equilibrium. Very, very clean there. Good for $4 off of that move already. Yeah. Man. Should have taken that. Oh, well, so Joby getting tight here. This is the one that I'm kind of considering taking a little nibble on because we got this big volume base that we're kind of pushing out of. It looks pretty tight with the moving averages clustered. I think that it can go for the equilibrium of today. I think that would be reasonable for a little trim. See if that's worth my time. If it goes to an equilibrium of today, that would be 885. That's kind of worth. Maybe I'll take it. Maybe I'll take it if it gives us the look right here, which it looks like it might. We'll put in an order for 100 shares off of. Let me do it in here to make sure. Off of 867 seems good. See if
Well, NVDA is roll right now. This one's moving.
Yeah,
SNDK still a little bit. Yeah, we'll say SNDK too. I was looking to possibly get into that. NVDA, there's that reversal right over 215 coming back down. Add-on for me would be back around the 1350 area and heavy at the 1250 mark if we ever got there. Yeah. That's the one I'm looking at for the rest of the day for myself. And yes, Nick, that is it. Yosemite Sam. I love that. Was the good old days. Old Looney Tunes. Let's see. Tax City ran into Rampage Jackson in LA a while back. Oh gosh, yeah.
I'm gonna add
those guys' hands are huge. That's how sports are. We all think we're even like me. I'm a bigger person, but then we'll see how big. Like I played with basketball. Like point me, imagine the NBA players' hands, and of course, like these guys' hands are huge. It's crazy.
Yeah, they can palm a basketball, and I'm like, I can't even.
And they palm a basketball the way we hold a tennis ball. I mean, let's just
exactly make it look so easy. So DRAM giving us the look into the 21 moving average and the 50 here. I'd say about going from maybe 35-40% chance of being wrong to maybe about 45-50% chance just with this pullback. I still like the odds. I got my stop right under that swing low. That's where it is. Risking about $15-20 for potential 50 or so. Trading nice and small. Just want to do something for y'all. Y'all watching so you don't fall asleep here. What else is worth talking about today? I'm trying to think. I mean, we could just talk about. I love Rampage. He might be my favorite MMA personality. I don't know if anybody caught some of his streams, but he's a very entertaining fellow. I will say that. And
definitely one of them. Oh man, I don't know. Come on, we got to go back to the old school days. Chuck Liddell had a pretty good personality.
Yeah, he was fun. That was like the golden days. Him, Rampage, like Lyoto Machida. We got a karate dude in here. That was awesome. Who else was killing it then? There were so many fun names to watch. And then what? Oh, like Vanderlei Silva. Spider, Anderson Silva.
Yeah.
Killers.
That's like what 2005-6 to 2010-11-12, somewhere in there was that was the kind of the golden era. It feels like for me. It was still fun to have your kind of random pops here over the last few years, like even going back to like, of course, recently with John Jones, but I'm sure everyone like myself, and I think she's a pretty girl, of course. So I was like, man, who is this? Holly Holm. When Holly Holm nailed Ronda Rousey, because I could not stand Ronda Rousey. I wanted someone to shut her up, and boy, I mean, Holly beat her down. I mean, go back and watching that fight I did recently. I saw it on again. What's her face just looked like she never fought before. Ronda. I mean, she looked terrible. And then the karate.
There's so much stratification. It feels like sometimes in these at least back then in these divisions where it's like, yeah, she was amazing, but they just never put her up against somebody who could really strike.
Right.
If she couldn't get her on the ground, she was in danger. And it can be kind of like a knife fight, I think, when you face a really good striker as somebody who primarily relies on takedowns. So I know some people find that boring. Josh is over here like, I don't want to watch dudes hugging for 2 minutes,
Yeah, right.
It's technical hugging, it's very strategic. So but then you got the big bruisers too. Mind Music Muscle, great name by the way. Welcome in. Fedor Emelianenko, however you say his name. He was a bruiser. Him, you had Verdum, and Mirko Krokop. He was my favorite. Just like 6'8" dude doing like the strongest head kicks ever. That's terrifying. That's like lethal weapon status. All right. There we go. All right. It's a little slow here today. We got the big move. Sorry. What were you saying there?
So they just love that. That's what I'm saying. Hey, you talk a little sport, especially that seems to catch the ear. That seems to be definitely still one of the more popular ones. Of course, anyone wants to talk NFL or whatever, but yeah, that MMA and UFC just seems to have that. it's for whatever reason, it seems like stock trading and that seems to coexist together. Like they like, if you like MMA, I like notice that even more so where people that trade stocks, that's like maybe their number one sport or their favorite sport or however you want to word it. But yeah.
No, I think you're onto something for sure, because it's the zero sum competition thing, I think, here, where it's like, it's just you and whoever's in the cage, maybe trading is a little even more personal, just because it's like you and yourself. But either way, it's very much like something that you just have to really immerse yourself in, right? You have to really kind of take the plunge and be about the lifestyle, and it's not like something you can just kind of dabble in and do really well. And so I think that kind of attracts the same mindset of people who like a challenge that's so incredibly rewarding. That's
for us degens. Now, of course, your Warren Buffetts of the world, they're into polo, they're into golf, they're into something that seems has a little more etiquette to it at all. Oh, you baboons are over there punching each other. What idiots.
just brutes, but it takes all types.
Yeah, right. But yes, I think for the degen normal day trader, yeah, it seems like it fits most. Yeah, that's what I'm saying. Then you have your like upper echelon, top of the top, the guys that look down on it. They're like, we're over here, want polo and playing badminton, whatever it's called. Anyway, they're doing stuff like that. Texas Hold'em. Yeah, mine must. I was never a big cards guy. That it's either you, and I've seen that over the years. It's either you play you're a cards guy and you do whatever, it's blackjack, Texas, whatever it might be, or like me, I don't play any of them. I'm not that big I've never big into that. But yeah, it's either one or the other. You were completely into it, or you just really never play and you were not that good at it. You get lucky if you do, and you're like, well, beginner's luck. I'm like, yeah, and they're like, this guy over here.
Well, it's funny. I think you're dead on about that. Either you're just like, give me all of the gambling, give me all of the betting, or you're like, why would I waste my edge, why would I waste my edge that I know I have in the market on my edge in a casino where I know that I'm going to lose more often than not, So yeah. I think it can be either way there, but no, I love poker. I'm just very bad at it because I recognize how hard it is, and I'll play casually. I'll play, very, very low stakes, but I do really enjoy the strategy of it. And I love how bad I am at it. I know that there's like such a high skill ceiling, and that's something I really admire in any kind of game. So yeah. I like being a student of the game and just like watching, replays and tournaments and just hearing people who really understand it think about the game. And I love that, just how I like listening to you or anybody else on the team talk about trading. It sparks the same thing, because it's just anybody who that's their passion. I just want to hear them talk about that, especially if it's anything game theory related. So yeah, I bet we have a bunch of poker fans in the house. Yeah, Poker's Math Edge, and we'll always say one of the best trading books is actually a poker book, Thinking in Bets by Annie Duke. It's all the same stuff. It's managing resources, managing your bankroll, and putting your money to work for you when the odds are the best.
Yeah, I wonder if I wrote a book that was called "If You Don't Like Reading, Read This." Would you? Right? But I'm thinking it's so catchy you would like it. Like, you're like, oh, I don't like reading. I want to read this. If you don't like reading, read this. The Stock Trading, whatever, by Josh Smith. The Stock Trading.
Reading. You're not going to get me like that, Josh. No, I think that actually probably would work, because there's so many people who like think that they don't like reading, and really they just don't like reading what their stuffy old English teacher made them read in high school or whatever. So I thought I didn't like reading for a while. Turns out I only like reading interesting stuff. So
Snowman says write it. He says I want that book. I'm telling you, I need to write a book. First off, about stock trading, people have said, man, you should write a book. I do. I should write 2 books. One that I would love to base my movie off of, because I'd love to write. I still to this day want to do a movie so bad. But I need to do honestly write a book. But I wonder if that would be a good. I should just do 2 books, and they're the same book. Release one book with that title just to see how it does. If you don't like reading, read this book. And then a stock trading, whatever. And then see how well the sales are. And if it does terrible, then re-release the book with a new album or with a new cover or with a new name.
I was going to say, just release the exact same book. Just if you like reading, read this book. If you don't like reading, read this. You're going to catch them all. Well, that's called capturing a new target addressable market right there.
Right.
And We
I want
brought
to
it
give
right
them
back
all.
to stock trading. Just in
Real,
time.
real quickly about movies with Avery was just came to my head. And I said I want to make a movie. This would be funny to make it this way. But have you ever seen the movie? She just watched it with her parents recently. Her parents have never seen it. It's a great movie. Have you ever seen the movie Be Kind, Rewind
Yes,
with Jack
that's a
Black?
Jack Black. Yeah,
Yeah,
that's a fun
and
one.
they remake movies in like the worst terrible way, and they put them on the shelf for people to rent, and people then start renting those.
That one's great. That one reminded me of like a wholesome version of like Clerks, which another
Yes,
great,
yes,
great movie, couple movies there. But just it's so comfy like that, especially for boomers like you, right? I mean, the VCR stores, the Blockbusters,
yeah.
like
I'll do
they for me,
that. Mhm.
yeah, like that was like memories. I'm
Yeah.
still a '90s kid, even if I'm born in
'Cause
'94, so
Yeah, because
I
even
got my
back to
time.
that, yeah, I remember that in the store though. Even like the little thing is it like you would see that they would tell you like they're like don't forget to be it'd be quiet like they were like that was your thing because there are even things that rewound the tape for you. Remember you could buy something, stick it in, and it would rewind it all the way back really quickly. I never had
Right.
that, but some of my fancy friends had one that literally they'd have it on top of their VCR player, and as soon as they were done, they'd stick it in that, and it would rewind it really quickly right back, so you wouldn't have to press rewind. Because remember back in the day to rewind, you had to press the rewind, the double button that would take back at a certain speed, but you have to wait like 5 minutes, 3 minutes, or whatever it was for it to rewind all the way back to the beginning of it. So yeah, those were and then sometimes you'd rent a movie. It didn't happen much. We'd rent a movie. You'd get home and it'd be a different movie in there. They would replace it with a different one. You're like, oh man, what the heck? This isn't the movie I'm renting.
Oh boy, no, I'm totally with you. Mind Music Muscle, you have a great question here. I don't know if we'll have time to cover it right now, but I'd love to cover this on Power
Yeah,
Hour. If you're around
yeah,
in an hour, I'd think I have a perfect chart for an example, and we can talk about how to pyramid into a trade. We're going to
yeah.
be talking about Nvidia. I'll just give you a little teaser here, because
And
even today we can talk about.
that almost looks like Mind Music Muscle is in an old Blockbuster, and it looks like old DVDs are behind him. I can't really tell where he's at, but it's almost like he's going live at an old Blockbuster, and it almost looks like the racks of like DVDs or VHSs you would see racked up there. He's like, "I'm going live, the only Blockbuster still available."
I'm like squinting into the 3 pixels that I see on my secondary monitor here. I'm going to trust you. I'm going to believe you. But this is a crazy chart and a great example of how you can pyramid into a position. We're going to pretend like we got in here when we do take the trade or review the trade, and we'll see how that goes. Where we would trim, where we would add back in, because I'm seeing multiple places where we could kind of juice this trade in a pyramid type fashion. So definitely try to tune in then if you can in just under an hour. I will be back here, and we'll start with that, and then we'll go around the horn, do all that stuff, all the stuff you need to
Yeah,
know
because
what's going
he'll
on in the
be
market.
touching up on you'll be touching up on earnings too. So yeah, stay around. Mind Music Muscle. Take a little hour break with Steve. I'll be taking a break too myself, and Steve though will be back here on the live stream a little less than an hour from now, and get you guys covered, get you ready for earnings, what's coming out today, and then do that for you. You'll have an whole hour to break that down for you, and Steve's the man to listen to for sure.
Awesome. Appreciate it, Josh. As always, had a lot of fun with you here on the lunchtime recap. So, guys out there, don't turn that dial. We're going to put it on a scanner for now, and then I'll be back for Power Hour and then those earnings. Thank you so much, guys. Yeah, nap time. Exactly. All right, Josh. See you in a little bit. All right, what is up, guys and gals? It is Steve Tallman here once again with Trade the Pool for Power Hour. We have had a fun one. SPY got the move to 715 over pre-market or into pre-market highs that we were looking for. So not much doing on the indices here for me. What we do have are a couple trades on right now. We are in Joby as well as ONDS, playing a breakout on ONDS here. I think it is moving through its high of day very, very nicely. It is a beautiful daily setup. I'm going to pull that up briefly on the daily chart here. ONDS daily. As you can see, a little bit extended intraday, but I do think that we're going for a strong candle that could very well push through this $11 cliff, $11 point of control, and go for $11.50 today. That's the target that I'm looking for here. We had 2 days of nice consolidation, wicking back into this support, into these ribbons here. And of course, we are flirting with this big downtrend line breakout that we got. We got the breakout, we got the back test. If we push out through this high, then we should fly. That's the setup here. I'm seeing a lot of calls for next year, and even like I saw a lot of 2028 30 strike calls. Pretty wild stuff there. So I'm a big bull on this company long term. Fundamentally, I think that it should be a $30 company in a few years. So that tracks for me. I'm in. I am both metaphorically and literally in from under $10. About $9.80 is my cost basis this time around. Loving this setup, and here we go, surging to 11. I think we're going to surge through, so that's why I'm playing this breakout at all. I'll go ahead and put my stop in, though. A very small position, just watching, just playing for you guys on stream more than anything else. In my accounts, I am already quite loaded in this bad boy here. Joby, the other trade we're in, this is another one of the drone spaces. I think that they're starting to get some liftoff this week. Joby. So this one's a little sketchier on the daily, I will admit. But hey, you see our entry there right at the pivot, starting to push up nicely, testing these moving averages. This is where I'd expect a little bit of sell pressure to come in, especially into the 9 handle. If we get there, I'd like to trim that. But I do believe that we essentially, pull up an hourly chart, that we essentially are holding the line here into earnings in a few days. We had the big pop-up pre-market, came down right out of the gates, but it held the low, the previous low, and it really all it did was renegotiate yesterday's closing range, or at least yesterday's candle. There we go. There we go. That's what it retransacted. So see, this is a really important concept, guys. This was the bottoming candle. This was the bid that bottomed it, or at least is potentially bottoming it in this range, right? So this was cash session. Then it comes back a little bit in the end of the day, but still showing buyers. Big bottom wick on the hourly. Pre-market trades down just a little bit, then surges up. Where does it surge? To the target. Look at that. See the range? It's a mitigation move right to here. So it put in the range bottom. Now it tested the top of the range. See that? Tested the bottom, put in a strong candle, strong enough to test the top of the range. Now we come back down, we test the bottom of the range. Was this just another re-entry for shorts and we're pushing much lower? If so, I would expect this big candle to get eaten through and we lose pre-market lows and start to really hammer down. Since we didn't get that, we held the line and showed a strong high volume catch in the past couple hours from where we entered there. Nice entry on our part there, showing the incentive to break above this previous day after catching for 3 hours. And yes, nice expansion on this, and we think this should be good for a swing trade. That's how I'm framing it on the hourly there. And the important thing is there's earnings on Wednesday. So we'll be trimming heavily into earnings, holding just runners if I do hold any at all. But you can see where it kind of bid down from in the morning. Pretty okay. Just this downtrend line, and I think it's quite healthy. Ooh, all right. What else we got? Are the what do you call it? The lithium one's working? I haven't checked that account in a minute. Ooh, HTCO, by the way, crazy. We got to give Josh flowers here. Our man's killing it. He called the long, I believe it. I don't know. I mean, we were looking at it. We were hunting it in this 31, 32. That's what I said was support there. I should have bought the back test there. As you can see, 31 to 55. since we've been gone for about an hour there. Absolutely insane move. I also was trying to short it somewhere around here. I didn't, or no, somewhere after this expansion candle. I didn't get the pop-up that I was looking for into a moving average. That might have been the closest I got, that last 1 minute candle there, and I did not pull the trigger. Now it's gonna knife, darn. Yeah, I was hoping to take this one from about, oh man, it was still 37 bucks up there. Right before stream, I was like, should I just hammer this short? Oh boy, all right, that's okay. That's all right. We are still going to talk about a few things here, and maybe this will give us an entry. I would like to get in. I'll put a little order in off the 9 moving average. Hopefully that works. Yeah, sometimes they just move too fast for me to react, especially on stream like this. So I will always say I'm a better analyst than trader. I'm still working on the trading part, guys. It's hard. I'm working on getting my trading widget to open up. There it goes. All right. This will be at about 36. I got to trade this so small. And am I getting crazy? The idea here is that this is an engulfing bearish rejection move, so it should have a good amount of juice to come back down. Test some of these halt levels, perhaps. But I can't get ahead of myself and get ripped too badly, just because it moves so big. So I think 15 is about as much as I'd be willing to risk. Honestly, just 10 shares. And we'll see. We'll see if we do get the clean entry. I almost want to wait now because it's posting little bottom wicks off this 200 for a pop into the 21. So that'd be 40. So I'm going to put a dream order there, selling 20 or selling 10 shares. Oh my God, 150. No. Always double check your orders. No typos. 10 shares at 40. I'll put that limit order in. There we go, and change this to the right one so we can see it on here. That's what wasn't working before. Now we can see all my orders on the screen. Sorry about that last time, guys. Yeah, we can see this order. That's good. Nice. So Joby tagged into the equilibrium. If I wanted to trade every candle, I could tranche out there. I just want to kind of hold this and see where the candle closes, though. It's a very small position, up 15 bucks currently, just hanging out. ONDS still acting right, flagging. I will buy off of a little wick down and reclaim of the 21. That's where I'll add if I see it and get a spot there. Oh, let's see. Yeah, I think ONDS is just kind of doing a stair stepping. So I bought the breakout. It was silly, but you know what? Like I know where it's going, and I want to add into the position. I have a whopping 25 shares of ONDS. I'd like 100. So I'd like 3 more chances to add. That's what I'm sizing for a swing. Remember, this is for a swing. If I was scalping, I would not be trading it in the same way. I would be very hesitant to be buying a breakout like this, and I would be trying to just look for the momentum, take the momentum trade, and the second that stops, get out. SPY just looking a little bit heavy. Not too bad, though. Just kind of trading back into the top of this range. We could see a little bit of a pullback into the end of the day. That would be pretty healthy, pretty normal. Come on, HTCO, give me one little pop to these moving averages. Get me in. I'll get in at a little less than the 40 round number. Yeah, 39.50 is fine. Stair step. Yeah, 2 steps up, 1 step down. I want to see it. I like that it's tightening up at the top of the range too. This is acting good for me. I'm going to zoom in here. What I like, this pop, what was it? It was some... Let me bring up an hourly candle, see what that was a liquidity grab of. Yes. Yes. Mitigation block. So we surge up here to here. Honestly, realistically speaking, I think that I should be looking to load on a retest of this high. So this stop might get ran and I might have to get right back in. That's fine. I'd be down like $7. I'll take a $7 paper cut to get a better entry, and then I'll just size bigger if it gives me the good look. But here's what I'm seeing. And this is why I got in here, because sometimes when it does this mitigation move, so it has a pivot. I'll show you this. We have a pivot. See that pivot right at $10, I believe, $10.25. So We lose the pivot. We sell. Then we rip back up to the mitigation level. Sometimes we will squeeze right through. Sometimes we will do what we do in this area here. So we have the mitigation level. You can take the trade down here. You can sell it here. And sometimes it needs to back test again before kind of being constructive stair-stepping up. Both are possibilities. I wouldn't really like to see a full retrace back to this level here at 1060, but I would buy that too for a swing, if it shows that there are buyers there again, because that would be a back test of this kind of flag that we're seeing. In general, looks like we are, I mean, it's a well-developed daily chart, so I think there is a potential for at any point for this bid to start to catch fire, right? And we did surge through the equilibrium here. For me, worth putting a little more risk on here in case we do get the surge. If we do come back, like I said, I want to be a buyer once I find the confirmation of support coming in. Joby, nice breakout on Joby. Glad we held there. So now see, we held through the 50%, the surge through the 50% on Joby. So I like this look. I like this look. The first place that I should be trying to trim is going to be up here at 893 is definitely a healthy place to trim. I have 100 shares. We'll trade. We'll do it right. We'll do it proper, even though it's very small sized. So we will sell 25 at 893, locking in a just under about a 25-cent move, about an hour. That's worth your time. It's worth your time. So hopefully we do get that fill. We should get that fill. Sell there. And I can actually look to buy into this imbalance here since this is a nice strong candle. I could, but I don't feel it. I don't feel super compelled to. So I'm going to wait and let it progress a little bit. HTCO might come back up to our level. No chasey, no chasey. ONDS is giving an entry off the 21. I said I'd buy there. I didn't quite get it. Let's see if it'll fill me. I don't want to chase it. Looks like I might not come back for me there. That's okay. So I'm a little sleepy. I should have had these orders in already. Kind of talking through it instead of doing it. But we'll see. We'll see if we get it. The other option is it loses the 21, needs to come back down to this higher support here at 1075 at the 50, potentially even down to this 1067 that we're talking about. That's the area for a dip buy where I would get in with more size if it maybe wicks into this 1060 and catches really strongly there. Get in on a little bit. Little bit of a confirmation there so far. Still very strong. Joby surging higher. Very likely that we get our fill pretty soon. Let me check in on these comments. What? No fibs? On what? What don't I... Oh, let me get some fibs on HTCO. I'm so sorry. Let you down, Talk. I'm out here fibbing. I'm out here fibbing when I should be actual factual. I'll keep it 100 with you guys. All right, there's the fib. On HTCO, testing the 50% retrace. A little spooky. So actually, since I have this order and I need to just instantly put a stop in once this does get filled, just so I don't get run the heck over. It's always a possibility that these keep going higher, and SPY's catching nicely. All right, guys, I'm a coward. 5 shares. I just want to try this. I don't want to get burnt too bad. Why is that not going through? Let me change it on my working orders tab here. Yeah, just to be safe, we'll re-put the order in. Five shares. I don't need to die a hero. $13.950 is fine. ONDS, nice curl up. Did not get that little dip entry. It didn't come back that 1 cent I needed. That's okay. That's okay. I will move that order up 2 cents because if it comes back down to retest our moving averages, I think it's still very fine and healthy. And we did get our fill on Joby there. Nice. We don't need another hero. You like the actual factual? You can take that one for free on the house. Nice continuation on ONDS. And it looks like is HTCO halted? I'm just gonna wait to put the order in, guys. I'm probably gonna miss this trade. I don't need to go out like this. It's so scary. It's so scary. And I think that it's probably going to work out. We're gonna watch it. We're gonna watch it here. I think it is halted at 37.21. Oh, what do we got? What do we got? Let me check out some other small caps. And then in about 15 minutes, we're going to be talking about the after hours earnings that we're going to be getting. You know, it's not a super jam-packed one. I think that we're going to be saving our energy, our focus for the ones on Tuesday. Wednesday in particular is going to be massive, and Thursday very big as well. So I think today I'm going to give you the prep of the setups. We're going to walk through that little presentation, but I don't think we're going to actually be trading live after hours today. Just putting that on your radar. So the half hour, we're going to kind of just front load that. If anybody does want to trade, you'll be given your levels and all that good stuff. We have, man, Joby's looking strong. Strong like a bull. I think it sweeps the top. So that's our next trim at 913. If I didn't trim at 830 or 893, I'd be trimming into the round $9 if I didn't think that we might just surge straight through that, similar to the ONDS. This is where that higher time frame bias comes into play. Okay, we did get an... Is this an unhalt? Yes, okay. 5 shares off of the 40 and that... Yeah, 39. I want the 50 minute. So that white curling line. I want it to pop up into the 50 and fill me there. But it's a little bit spooky, these bottom wicks. And I have to consider the fact that it might run up to the midpoint of this range, this imbalance. I might add 5 shares there. And then I might add 5 more shares here. And remember, hard stop over the top here. And I got to think 37 to 56. That's actually too much for 15 shares to get ran. Oh man, it's looking so weak. Is it just not even going to give me the 50 minute? I may very well have psyched myself out of this trade. Do I put it at the 20 and risk getting ran? It's looking so weak. I just want one candle up. Let's see if it gives it to me. I'm getting a famous last words type vibe on this setup, so probably not going to add any more than the 5 shares. I can risk losing $60, but I don't want to risk losing more than that on something silly. Oh, ONDS, beautiful breakthrough of $11 here. We're hanging on to that one. We're not letting that one go. So now I'm looking for ads off these rising moving averages, if it will give it to me. Very strong, so it's confirming the trend. It might not. I would be kind of surprised if it came all the way back at that point, but just who's to say? So now our stop is going to be under that previous swing low, just because we don't want it to... If it's going to break the range up, we're expecting that. If it breaks the range up and then rejects and goes all the way back down, then I need to wait for it to rebase. It's a new setup, so I don't want to have the same kind of mindset that I did. Got to keep changing those orders as the situation progresses. Joby strong like bull. We like it. We like it. I think it's going for the high of the day break, and then we can start to flip on over. I'll actually flip over to some 5-minute charts here. Give us some room. Give us some room to digest and process. I think that Joby wants the 9 plus more. I think we get the 950 tomorrow or the next day. I do think it's risky, but I'll put some skin on the game. I'll put some cash on the table, see what transacts. We got the move through 11, and this is 2 minutes before a 5-minute flip. I'm hoping that we close the 2-minute or the 5-minute candle there over that level. Ooh, how am I feeling about to get filled here on HTCO? This is how I know it's probably sketchy, because I want to move it again. But we're just gonna fill, and let's see how it goes. I think I should have waited for my spot. We shall see. But I don't hate it. I don't hate it. We got a pinch. We've got a big sign of weakness. To me, the upside is, well, the potential reward for a short, pretty good. We could potentially seed back down to 20. I would like 25-ish. About a 10-point short. It's not amazing risk reward, because if it runs the stop, it goes pretty darn high, pretty darn fast. I think I need the 40 handle to feel a little bit safer. If it misses it, that's fine. This is why I don't trade these you guys. I don't have enough confidence in them yet, but I do want to learn. So I think I may have psyched myself out of a good entry there too. We'll see if it just drops. Through 11. Let's go. So SPY as well. 1, 2, 3 knocking the high of the day here. Whoa, whoops. Phantom fib. Don't know where that came from. Anyways, 1, 2, 3 knocking. Maybe it needs to do the 4. So maybe it kind of last gasps up here and then needs to fade. Makes a higher low. Then pushes through. Something like that. All right, some just got filled. Okay, I got filled on another ad of ONDS on this little pressure release. Honestly, that's a sell though. I will not lie. That is a decent sized sell off of 11, so they want to hold the line under 11. We want to gauge the strength of the buyers who step in, the people like me who are buying this. If we lose this, hey, we lose it, that's okay. Because that's just going to set up a better buy for the swing, and we've already cashed in some on Joby. We are green on the day, hanging out. I think that we are managing our thinking in bets decently here. If we lose this, I don't really need to be in this short term, and we'll just keep it on the radar for this week. SPY looking right for that surge. We want to see the pressure release up here. HTC, oh goodness gracious. It's a decent sized candle, making me nervous. It didn't fill me. It wicked through. It's a little spooky in it. We will see how it plays out. I did not get filled. Currently, the wick went through my order, but it did not actually transact there. I'm spooked. And SPY, okay, did get the little bit of the sell here. It's still not quite ready. We're watching the moving averages to see if it can make that little tick higher. That's what the bulls want to see. Yep, still holding the 9. What's up, Mike? How's it going? You got Sleepy Steve today, but I think we're chilling. This is looking so strong though that I think that I might be crazy trying to get in this, but I want to trust the moving averages and just the rejection of this and recognizing that it can come back pretty decently and still end up doing the thing. Guys, oh, am I in? Okay, I'm in. I was just about to take it down to 2 shares. So we're going to watch this closely. Put our emergency stop in case it goes crazy on us. And now we hopefully watch the sellers step in off this moving average, off the back test of this kind of yeehaw stop run, wipe out all the liquidity to the upside. Come back down, collect some more internal liquidity. Now reach up into the area where the big seller stepped in. We want to see it reject. So far it is not. We're down $4. That's why we're sizing small. Down $9. And I want to see where this next candle closes. I think I might just be wrong here, guys. And I might take a $13 loss. Oh man, yeah, I thought that this was the big rejection, but if it doesn't sell pretty darn fast here, I'm just gonna hop out. Last level of interest is gonna be the equilibrium of this intra pop range here that we're just tagging into. If sellers don't step in here, I think it's time for me to bail. Just did not seem like it's ready to let go. I thought it was. But these candles, too strong. Crazy intraday movement on this stuff. SPY, okay, getting pretty tight here. We want to see this and we want to see the one push up. Halting up, yeah, I'll get out, Josh. I know I'm playing with fire. That's why we're in only a few shares, though. So this will be a good post-mortem for me, because I thought that when we lost this big surge up, it was going to be the death of it. And it was going to backtest and then reject. Instead, it backtested, filled me, and squeezed up and halted. So currently sitting underwater about 18 bucks. Might end up being that $50 stop out. But hey, as long as we keep it small, gonna be okay. Joby's still looking like probably my favorite of the swings, but it does have that earnings coming up. But I'd like to see it carry into that for a few days here. And it looks like we're going to get stopped on ONDS. So maybe I used all my luck in the first half. After these do get stopped out, then I do want to keep an eye. I'll set some alerts, and then I want to start looking at the LAC and the LAR, all these lithium plays that were starting to move really nicely. Do want to keep an eye on those. Switch over to LAC real quick. See how that one's, that one's progressing beautifully. Nice. Should have just day traded this. So, nice big break of the range, of the opening range here. We got that nice pullback into the moving averages, all respecting on this 5-minute little coast up here. Beautiful. You love to see it. Yeah, ONDS is gonna sweep our stop, it looks like. I'm not gonna move it around. I'm just gonna wait and see what it does when it comes back down to the next high volume node at 1071. Assuming it does sweep this, which looks very likely at this point. Yes, Mind Muscle Music, thank you. Sizing into positions and winners. Let's talk about that. Oh, nice. ONDS caught. Beautiful, beautiful. The last thing I'm waiting for to get into that is I want to take this loss on HTCO in a healthy way and not let it just cook my butt too much here. So I do want to keep an eye on this halt. We probably have a few minutes, so I will switch on over to NVIDIA now. Let's look at that. Actually, why don't we talk about it with LAC since it's right on our screen. So sizing into winners. How can we take a trade that's starting to work early in the day and build into that win? Build into the win. That's the idea. So it all starts with how we're framing the trade on a higher time frame here. Let's go to LAC. So the idea for LAC, the framing on the daily here, was that these moving averages, it's starting to flag nicely into these moving averages again. Meanwhile, LIT, which is the lithium and batteries ETF, is breaking new highs, looking incredibly strong. Commodities in general seem to be performing very well. And what's the other one? LAR. LAR is appearing on my scanners. This one's great. SGML, a little extended for me, but also not so bad. Yeah, this one looking really good too, flagging over its range break. And then ALB, this is the blue chip. This is the one I should have bought at 80. Now trading at 200 and looking amazing still for upwards action here. I love this chart, guys. 1, 2, 3 knocks, and now it's about to make the 4 and push higher. I do believe this is a hot sector to be in. So let's get back into LAC. We framed it in as a bullish trade on the daily. We were looking for it to be long on the morning. I hit the gym this morning. I waited for the my triggers to alert. I came back to my desk at about an hour or so after the market. We're going to look at the hourly chart here. What we see, big range on this first open hourly candle and then a wick. So there's a few areas of interest here. This pre-market high, that's where I was looking to get long. That's where I did get long. 485, 484, somewhere right around there. So the idea here is that if I was really on the ball and just bought it open, say I get a starter here because I'm already biased long and all of that stuff, and it starts pushing up. Okay, great. And say my idea is for a swing trade, so I'm not looking to scalp out of this immediately. So what I'm doing is, okay, we get the range open here, and now we come down a little bit. Looks like we hold the 50% of this opening range. Yes, we do. So we find buyers off the moving average. It's game on. So you can start adding in maybe on this candle close when it reclaims this 21. That's a nice place to add. And then you can also say, all right, I'm going to add here. I'm going to take that add off when we break this high of range, and that's just going to give me a little bit of a better cost basis. And then you can say, okay, then if I take it off here, we come back down and hold the moving average that I expect us to, this yellow, because that's what we reclaimed, then I can add that trim right back. So it might not seem like a big difference to take some off at 42 and add it back at 478. But by doing this, it can allow you to be able to kind of keep adding as it works, because you're also taking some off at logical places with the intention to just add it back cheaper. So you don't have to trim here. You could also just say, hey, it did the thing, it broke the range high, and now as long as it holds here, I can either add here, right on this candle close, or I can add on the break of this range, on this candle close, very strong candle right into the top there. And then you get the surge. So now you're like, okay, we are in uptrend mode. So you can add here, but you have to be like tactical about it, right? So you can say, okay, we broke the range. I bet that it's going to continue to move like this. So if my stop is under here, I'm allowed to add off this 9 with the idea that it's handing off from one moving average to the next. So we have the 50. That handed off and caught at the 20. So now that handed off to the 9. Couldn't just straight run, so go back to the 20. See how it's just kind of a handing off from one to the other? 20 catches again, back to the 9. Okay, now we're really ramping up. 9 should hold, 9 should hold. And then you trim when it loses the 9, right, on this candle. Then you say, I don't know what it's going to do now. I'm going to trim here. And so that's one way that you could get your starter. You could add here. You could add on the break here. You could add here. These are all valid places, as long as if you're willing to add here, fast add, you need to be willing to take that add off the second you lose that 9. But you still get a nice trade of, what is this? Get in at the 9, get out at the 9. 2.3% move for 20 minutes of your time. So that's a great way that you can pyramid in. And then you just got to be willing to take the ads off if they stop working. So say, okay, I'm taking the ad off here. So now I still have that core position. So now, okay, we hold here. This is too high for me to be adding. I need to wait for a midday pullback where the morning volume, the morning session, the first couple hours fades off. Almost always it happens. So you see, okay, we failed to make another high. Maybe I take some more off here. If I'm just in a day trade, I just get out here. If I'm looking to add in though, this is the time where I'm locking in a margin, a margin to work with, a cushion. And then I'm saying, all right, where is the buy zone? Where am I looking for a dip? First thing you'll look for is where the expansion happens from. A 50% retrace is a good area to start looking. And you can see it just hangs out in the golden pocket, gives you buys there as it consolidates. So you can also look at it from a longer perspective and say, hey, it's just working. I'll take some off here. When it comes back into this intra support, I'm going to look for it to hold again, and maybe you start adding in here again. That's what I'd be kind of looking for. Let me real quick bounce back, see if I'm unhalted. Getting dragged here. No unhalt yet. Oh, there's the unhalt. Okay, it did unhalt. Spiked up, did not sweep my stop. I am now down a little bit less. So here's what I'm going to be doing. I'm going to put my stop over that wick now. And we are going to pray, Josh. we're going to hope that this works. But you know what? I don't have to pray too hard. I'm risking about $30 at this point, I do believe. A little more, 40, 50. Still roughly the same risk, but now it looks better because we put the wick in and it came down at least a little bit. So still definitely a crapshoot there. Not going to say this is a high probability trade, but I planted my flag and I want to take the shot. SPY, on the other hand, is carving up. It got that tick high and it doesn't look super weak yet. You can play this in the same way off these moving averages if you want the scalp. Just remember, if you're trusting a 9 to get in, you got to respect the 9 to get out. That's my rule, right? Because you don't want to get caught saying, hey, this looks bullish, I'm going to buy the 9. And then it comes back down to the 50 and you're going, well, I'm going to just let it rock and see what it does. Well, it's not respecting the setup that you took, right? And that's bad. Tyler in the house trimmed 2 of his MU shares, taking profit off to rotate. I like it, but I think MU might just be getting started. I think it's a megaphone that's breaking out. So I'm holding mine, but I do respect trims into new highs. Let's look at MU real quick. Because Tyler, guess what? No one ever went broke taking profit, and I do respect we broke range and we're putting in a top wick. So personally, I'm waiting for 500 to come back down and confirm as support on this megaphone breakout, and then I'll be a buyer there. I like the trim here, and you can add it back there if you want. Something to consider. All right. Talking potash. Oh, you're still Yeah, 15.7. I respect that. That's a healthy position size for a very strong stock that I think is a good one there. I'm sitting about 8, no less, like 5%. I wish I was sitting at 15. A little top hook on HTCO keeping me in it. And SPY getting the first sell after tagging that high of the day. Oh, and it did tag it after the half-hour mark in the last half hour of the day, so there is potential for the algos to kind of flip off there. And if they do, that would be the high of the day, and we would come back a little. Honestly, though, this is looking strong enough that I would not want to short SPY. I would just be cautious about it if it loses this kind of little consolidation range. So far, it's acting like no shorts are allowed. And it's just eating that right back up, but we got to wait and see where these candles close. This is the 5-minute close, a nice strong candle there. If it engulfs, I think we have the chance to squeeze these shorts a little bit. Pardon me. Had a 9% when you entered and it took off. That's the best feeling ever, right? So you're just trimming to keep it at a fair size for your port. We're now green on our HTCO, by the way. Let me start thinking about where I want to take some off. Got my heart pounding a little bit for 5 shares, making me feel alive a little bit with this HTCO. It's a fun one. All right, so I've gotten my entertainment value, even if it takes my $50 at this point. It's been a fun little back and forth here. So now that we're green, we already defined our risk over that wick. So the idea here on HTCO is that I want to shoot for the fences, swing for the fences just a little bit, because it's made the big move, and a mean reversion move on something like this can still be pretty significant. So what I would like to see is, if we failed to break the range high, I think we break the range low down here at 31. I would love to trim into the 30 handle. That's what I'd like. We'll see if I get it. Sell 2 into 30, 25, 26, just cuz. Sorry, buy, I should say. Buy to cover 2 into 30. Okay, there's a little bit of follow through on the SPY, a little bit of the red there. Gonna watch and see if it can hold this little imbalance where we gapped up from. Sometimes it'll form the high or low by just reaching into that imbalance opened by the big green candle there off the low of the past hour or so's range. If that is where it holds, then we can look for it to retrace the back here, form a higher low, then push higher. If it fails, then we could see a flush out to some area of interest, probably this 714.50. You see that low volume area right here? And zoom into there. You see this on the side. So if we lose, the bottom here is 714.77-ish, 714.70, the blow here. Then we should sweep in to this hollow area down to 714.50 or so would be where I would be looking to sell, also because that was a level from this morning. So that's our setup there. Meanwhile, LAC don't care. That one looks still very strong. MU kind of doing its own thing too. We'll have to watch this one. So far, the wick back into this imbalance has found buyers, but now we're doing the hard part where we're retesting these moving averages as resistance now. We need to flip them back just like we did here, to maintain this structure. All right, we got 22 minutes left. I do want to get into the earnings a little bit. I think we can just let these ones cook. What do we have open? I think our ONDS did get stopped out. I do want to keep an eye on that one. Our Joby's still rocking and rolling. We're hanging on to that. Yeah, ONDS, a little weak. Lost about $5, $6, $7 on that. Oh well. The bigger picture, I think, is still a very nice candle for today. So I'd like to look at this one for the close for a potential little swing. Holding the LAC for a swing. And what am I missing? What's LAAS? I'm interested in that. We'll check that out in a second. But let me pull up my little presentation for y'all. One moment, please. Nice break of range on LAC there. Beautiful, beautiful, beautiful. All right, I'm going to get into it. All right. So let's get into tonight's earnings prep, guys. We have four names reporting that I'm really keeping an eye on. One in the morning that was worth noting there in Verizon. So let's talk about it. The slate tonight is going to be Amcor. We have Cadence, CDNS, CLS, Celestica, and SCCO. What is that? Southern something copper, and Verizon as well, like I mentioned. So we have some interesting stuff. Here's the full picture. Verizon already came out this morning. So the quick debrief there is, let's see. The headline number that moved with the stock wasn't the EPS, it was the subscriber number. Let me pop on over to this chart as we go. All right, there's the action. Pre-market, you can see 46.50 up to a little 5% move, which is a pretty big move around Verizon there. 5% gain to 48.60. It tried to break that. Pre-market could not and is fading back right around to the previous day. Let me get into a daily chart here for y'all. Yeah, so big top wick here. Big top wick here, basically rejecting over the moving averages. And let's see, they gained 55,000 postpaid phone customers in Q1. That might sound small, but here's the context. It's the first positive Q1 postpaid phone net add Verizon has had since 2013. Analysts were modeling a loss, so it wasn't just a beat, it was a full reversal of that trend. The EPS came in at 1.28 versus 1.21 estimate. Solid beat there, and revenue was a touch light at 34.4 billion against 34.9 estimated. So top line wasn't perfect, but they offset that by raising full year EPS guidance to 4.95. I'm sorry, from 4.95 to 4.99, 5 to 6% growth there. The big picture question, I think, is going to be, does this one sub number change the narrative for Verizon? Because for years, the thesis on Verizon was buy it, clip the dividend, don't expect much growth. But if they're actually adding subscribers again in Q1, which is historically their worst quarter, that could flip the story. So I do want to watch the price action into that pretty key 47.50 level as we go in for a little bit of signs on this direction of the sector. We had a very strong distributive kind of top here after a crazy push up, came back, retraced about 50%. Yeah, 50% perfectly, held, and now we're kind of just oscillating. We backfilled this gap, and it could be the case of, despite relatively strong numbers, it seems, that the market just isn't interested in this risk-off type play, considering the the environment we're in, right? So that's the only one of interest this morning. Getting on to what we're seeing today after hours. Amcor, an absolute slam dunk this year. We got in at $23. Are we still holding? No, because I'm a bad trader, guys. I got out at 50 because I doubled my money and I felt smart. I should have stuck with my thesis because the thesis was good. We have a bottleneck in the packaging, in the supply chain of these AI type, of this AI, what would you call it? Sector, whatever you'd call it. There's multiple subsectors, and this one was really, really primed. It was underperforming. It wasn't a first level play like NVIDIA or Broadcom, TSM, anything like that. So this one, absolute slam dunk. We're seeing all of the underperforming semiconductor names starting to join the party here. It started with the small cappers like Air, AEHR, absolutely explosive there. Amcor, Teradyne, all of these ones that were trading basically sideways while NVIDIA and the leaders were ripping and doubling. These guys have doubled and tripled to make up for that in this year. So excellent follow through on our thesis there. Let's get on into the numbers here. This is probably the one I'm watching most closely, and it's really because of the implied move. So the options market is wilding out on this one. It's plus or minus 21%. That's a $16 swing on a 77 stock that they're anticipating here. And this is the kind of setup that I'm seeing. Amcor's run 70. Is that correct? I got to double check my notes here. 76% in the last month. That's accurate. 76% in the last month. That's no slouch there, right? So the average analyst price target is around $55. The stock's trading at 77. So the street collectively has a $20 downside call on this thing, and it just kept ripping. Of course, grain of salt. Analysts, they never want to be too far outside of the pack. So they'll be safe and say 55, and then lo and behold, we just surge through that. I'm sure if earnings are good, which I would expect them to be good, the price targets will keep on climbing higher. The thesis here, though, is that advanced packaging for AI, chips, that are going into data centers, AI accelerators, that kind of stack, well, they're also working on CPU mass production ramps, and which some people think that's like a Intel or Apple adjacent play, but they haven't actually confirmed the specifics there. The guidance range, let me see. Looking like the guidance range is 18 to 28 cents for EPS. That's a really wide range there. So that tells you that even management doesn't have perfect visibility here. Last quarter, they beat by 56%, which is why the stock went so nuts. But can they do it again? That's the question. For NVIDIA, they had this period, I remember, when it was first starting to be the best stock in the market. All you would hear about is, sorry, just double checking. Yeah, it's still in the green on HTCO. All you'd hear about is these guidances are insane. No way they can meet these guidances. No way they can meet these. They just kept on screaming through them and guiding up. And the stock responded. Is Amcor in this kind of continual re-rate where it can continue to just reprice higher? So far, yes. Can it last? Well, this is going to be a great kind of check-in with the exuberance on these trades. So the number that matters tonight is not going to be that Q1 beat, I don't think, because that's so largely priced in. What I need to hear is the Q2 guidance and any specificity on when the CPU and the AI packaging ramps can hit that escape velocity. So if they give you a clear acceleration narrative, then the stock can hold these gains and keep on screaming. If it's vague, if it's cautious, then we could give back a significant chunk of that 76% run really quickly. So a 21% move to the downside would be roughly a retest of 60, which is roughly where we broke out from, $55, $60, this megaphone kind of range. So we could see a stark pullback here to 60 and then a rebasing happening here, and this thing could just scream and climb even higher. We've seen big pullbacks get eaten up very easily on these names when the narrative is there. This thing pulled back 30% from 55. That's when I got out. It was over 55. I said, I'll hang out. Then it lost 50. And I said, all right, good enough for me. Good enough for me. Should have kept it on the radar. So learning experience there for sure. But what I know is that this thing can pull back and keep going. So great company. If the guide looks good, but just maybe not quite what we're looking for, we can consider to start building a position again into the 60. If it just screams up and higher, well, then I just missed it. And that is what it is. Roughly almost $100 stock then. $92. And if it gets to 92, I'm telling you, it's going to get to 100. It'll get magneted up. So that's the big one here for AMKR. Real quick, let me hop back into the trades panel, see what's shaking and baking. We have HTCO looking weak, looking like a good hold at this point, and I may actually raise my stop to this 42.33. I think that's probably prudent. At the very least, for now, I'm going to put it over 45. It should not get back there. I think it shouldn't get back here. I just want to give it a little bit of a leash because it can do wild things. SPY acting very good for the continuation up higher. Very, very nice there. All right. Back on into the earnings here. We talked Verizon. We talked Amcor. We are on to CDNS. So this is going to be Cadence Design Systems. This is our EDA software company. Let me refresh these charts here, get a better view of what we're looking at. So weekly on the left, basing. Daily in the middle here, screaming towards that recent swing high. So I think that this is a flag that's breaking out and showing that it wants to keep breaking out. All it needs to do is post some good earnings here to get that continuation and sweep up to 350 and beyond. Let's talk about the details. So EDA software company. The EDA stands for Electronic Design Automation. Think of it as the tools chip designers use to actually design the chips. So it's kind of this interesting pseudo semiconductor play. You know, it's got this kind of mixed bag aspect to it there. The AI angle here is that the hyperscalers, your Googles, Microsofts, Amazons, they're designing more custom silicon than ever, and they're trying to do it faster. So the shorter the design cycles, the more the complexity there's going to be, and Cadence is a direct beneficiary to that. Heading into the print, Rosenblatt just reiterated a buy. Oh, it's 1250. That's why my positions got closed out there. All right, guys, we're closing a little bit up on the day. Nothing to write home about, but it was a fun one there. Make sure that you close up your trades if you didn't get closed out there soon, because we have 10 minutes left. We're going to jump in real quick to the charts, look at these mock candles. Spike up and an initial sell. So far holding the level, but we will see if this is a bit of a mock sell going into tomorrow. Looks like I am going to get robbed on my HTCO because I do think it's going to drop here. Do we get a little spicy and try to jump back in? What are we trading at? 39.30. See if it'll fill me. All right, I'm feeling spicy, guys. I'm feeling spicy. I want to hold that one until after hours. Putting the stop over that swing high, just 5 shares. And already starting to look like it's going to push down there. Okay, back to our earnings. We got 9 minutes. Yeah, we can do this. So Cadence here, heading into the print. Rosenblatt just reiterated a buy with a 360 price target. So right over these incremental highs. Very, very reasonable price target there. What else are we seeing? They expect a revenue beat, but a potential EPS miss. That's an unusual combination, and it sets up a possible beat and drop reaction if the guidance doesn't excite. So revenue growth is decelerating, 16% year over year expected this quarter versus 23% last year. The question of the market that the market is asking is whether that's just normal digestion after a big year, or whether it's something more structural. So kind of the push and pull between how much of an impact, how much of headwinds do software as a service still have to kind of power through, how much do their tailwinds from being involved so closely with the semiconductor trade kind of offset that, and who's going to win that push pull there. So I think that the answer tonight will come from the full year guidance revision. If they raise, the deceleration story can go away immediately. If they're flat or cautious though, then you'll see that in the stock price action. So bulls want to see revenue beat plus a guide up. That equals a narrative. The growth narrative still being intact. The stock back towards 370 to 377, where most analyst targets still sit. The bear case is going to be an EPS miss materializing. Guidance flat. Macro caution. Just stumbling over my notes here. The guidance is flat, so that would indicate some macro caution language from management that could send it back towards 300. So I'm less focused about the headline beat or miss here and more focused on whatever the management says about that AI design pipeline and the customer activity levels. That is Cadence here. Going on into the next one, CLS. This one is probably my most interesting, or the one that's most interesting to me personally. This one, or Amcor. So I'm definitely watching these ones closely for potential continuation, because this is an absolute monster of a stock that's been quietly one of the best AI plays. This one is up. I lament it every time I talk about it on here, guys. I had 24 strike leaps of this a few years ago. I made a good amount of money, but not nearly as enough as if I just held, because holy moly, this thing is a 20 bag from there. So sometimes you just got to trust that, hey, sometimes the narrative's so good and you're just like, man, the fundamentals are amazing. I'll wait for the technicals to catch up in a year or two. I'm going to buy some leaps. I'm going to buy some shares and not look at them. This is a great example of one of those. Amcor, another. Teradyne, TER, another. That sometimes if the narrative is good, if the fundamentals are all in place, just let her rip, you know? So Celestica is that great example here. This is a contract electronics manufacturer. They make the hardware that goes into the data centers and into that AI infrastructure. So we're talking servers, switches, storage systems. And while everybody was watching those chip names, Celestica quietly went up. Yeah, like I said, like insane percentages. It is currently trading at 56 times earnings. So the industry average is like 31 times roughly. So the market's pricing in sustained hypergrowth. They're saying these guys are going to continue to be winners. Here's the expectations going into tonight's print. The EPS of $2.08, up 73% year over year. And the revenue is at 4.05 billion, which is up 53% year over year. They guided to from 3.85 to 4.15 billion, and from 1.95 EPS to 2.15 EPS. So the consensus is right at the midpoint. So this isn't a situation where expectations are low by any means. The bar is already set very high, and well, very high relative to other companies in the sector, and right in the middle of their own guidance range. So 2 days ago, they announced a collaboration with Bell to build Canadian sovereign AI infrastructure. So that's the kind of press release management that really feels good when you're going into earnings like this. That's definitely a confidence signal from management, and one of the reasons why I'm expecting them to do very well on the print. But here's the number that really matters. It's going to be that Q2 guidance, because if they guide above 4.1 billion for the next quarter, that AI infrastructure cycle narrative is still in full acceleration mode. That 56 multiple is defensible, and they can keep on screaming higher. The chart looks very constructive, so this is my base case. If they come in at the low end of their own range and give conservative Q2 language, at 56 times earnings, you don't need a miss. You just need that hesitation, and the stock can get hit hard. So the bull case is the beat above midpoint and the raise for Q2 guidance. We want to see that AI hardware build-out narrative still intact. And bears want to see revenue at the low end of guidance, so about 3.85 billion. We want to see a conservative tone, and then that unwind can begin. So this is one of the ones that I definitely want to watch the reaction closely, and the implied move is kind of wild. It's $51 up or down. So $51 up would put us right at that $500 range. That's an 18% move. Oh, I'm sorry. I'm getting ahead of myself. It would put us on track to 500. It would put us at a 12% move at 473, right about there. To the downside, we're looking at a retrace into previous highs, which would be... yeah, about 17% to the downside into the previous highs and into that 9-week moving average there. All right, guys. Those are the most important for the tech narrative for sure, but there's one other one that I definitely want to talk about. So I'm glad we still have 4 minutes here before the bell, before I have to head out. And that is SCCO. So SCCO is going to be Southern Copper. Let's adjust these charts and get on into that. So pushed up, kind of formed a double top, swept out to where we broke out from initially, did a 50% retrace from that low, which was down to about 150. Now we are seeing some sellers stepping in at just under 200, and now we are trying to fight for a bottom wick on the daily under our moving averages. Question is, are we going to form a higher low? Maybe on earnings we flush out a little bit and then recover that for this higher low rebase, or whether this is the start of the loss of trend here. So that will be the other way that this could go. Going into the fundamentals. So Southern Copper mines copper, shocker, primarily in Mexico and Peru. So revenue is expected to be up big, up about 30%, 36% this year over year, to about 4.22 billion. That's wild. I remember when this thing was much lower in terms of their revenue. So here's the thing. That revenue growth is not coming from production. Copper production is actually expected to dip around 4.7% this year due to weaker ore grades. The revenue growth is coming entirely from copper price being elevated. And this is, if you've been hanging out with me a while, you know I'm a massive copper bull long term. Sure, photonics are great. I love those too. But I don't think that copper's dead by any means. If we weren't going to make all these amazing strides in photonics and light speed transfer of information, then we would need something like 100 times as much copper, or like 24 times as much copper as we are on track to mine in the next 20 years. So basically there's a massive shortage that's around the corner. I don't see any way around it. These copper miners, they are good investments long term. I don't see any way around it. Even this high up, I still am a very strong believer in it. The more they dip, the more I would buy in my long-term port. As for right now, what's going to be interesting here is that there's a key tension on this name. So the fundamentals of the business are getting tougher operationally, but the commodity price is covering it up. So if copper prices stay elevated, spoiler alert, I think they will. I think they'll go a lot higher in the next couple of years. If that thesis is right, then SCCO looks great going forward. If copper pulls back, or if management decides, pardon me, dying here. If management guides production lower, then you've got a problem on both ends. Excuse me. Where was I? That's the key tension for sure. So worth noting here, 14 analysts have sell ratings on the stock. 4 have hold, only 3 have buy. That's overwhelmingly bearish analysis from the analyst community. And yet they keep making money because copper prices keep going up. So there's a disconnect there. EPS estimates were revised down 6% in the past 60 days. So expectations have already been walked back a bit. And then we have the big number that I'm watching here. That's the H2 2026 production guidance. So if they can show that ore grade headwind is temporary and the production ramps back up in the second half there, you could see some of those sell ratings start to flip. If they confirm the volume decline continues, though, even strong copper prices aren't going to save the sentiment there. So just to recap, bulls want the copper prices to be sticky. I think they will be. Production guidance stable. That's what we really need to see. The dividend holders stay put, then the stock holds. The bear case is production disappoints, conservative guidance sets in, those 14 sell ratings turn into a coordinated sell-off. So that's more of a quick macro read. And yeah, that's definitely something to consider. For me, I hold FCX. They just had a bad earnings. I'm not really worried. It's a long-term position. I'm in from like the 50s, 40s, and 50s. So pull back to 60. I'm thinking of buying if it shows strength into this 60 level, under the 60 level. So I still like copper. I'm still hanging in there. One more thing. Oh, we are a minute past. One more thing I do want to give you. I don't know how it did today, but TROX is a titanium oxide producer, and they looked amazing into the weekend. Today, posting a little bit of a... So watch this one to see if the breakout holds or not. It's trying to hold right here, this breakout in titanium dioxide. All right, guys, that's what I got for you here today. Real quick, I'm just going to go through the comments, y'all. Give the shout outs to the crew. Great having you in here, Nick, Talk, Tyler, Mike, the crew as always. Larry Boyd, I see you, brother. Hercules Jack, awesome. Glad to have you in here as always. Michael Anthony, I see you too. All of you guys, I appreciate you. Each and every one of you. 93 I'm seeing in the chat. Beautiful. So guys, we'll be back here tomorrow. We're going to have all of our great stuff going, and then let's go over the earnings for tomorrow as well. Tuesday's going to have some fun ones here. We have the fan favorite in Hood, Robin Hood. So Hood's going to be great. We are going to be going into all the details, of course, tomorrow in our power hour, just like we did today, giving you all the information that you need to set yourself up for success on trading these. But guys, definitely keep an eye. We're going to have some big ones. Hood, Bloom Energy, an absolute massive mover lately. This has big implications for the data center and energy, battery, all of these kind of sectors that we're watching. STX, obviously important for memory. Visa, a little less interesting, but still important to know what's going on with consumer credit, all that good stuff. Teradyne, this is the big brother to Amcor. Both have been absolute powerhouses for us, and I think that does continue. So keep an eye on these as well. I'm personally, I'm gonna have to cover Enphase too, just because it's a really fun trader. Actually, how are our solar friends doing? Because there were a lot of setups that were looking like they were ready to break out in the sector, and this looks really compelling to me as we watch for potential breakouts in the energy space. So in my newsletter, I talked about oil field services, stuff like PTEN, RES, what else? PUMP. There are a few other ones I mentioned in the newsletter. Those all should have had a good day, but those are the sectors that I'm looking to fish in going forward. Yeah, PTN on breakout watch here. All of these have a lot of room going forward, and I do think that we're seeing that energy starting to join the party again, and we can see everything rally together for a little bit here, potentially. So that's where I'm at, guys. I hope you've enjoyed the stream. I'm going to head out, get a little bit of rest, and then we're going to all do this all again tomorrow. So thanks so much for joining, and take care, guys. See you next time.